Good afternoon. Hello, everyone. Thank you for joining us. We just did our sound check, so we're going to get started. This is Sherry. I'm your host for today's Traders Exclusive Strategy Series live event. We're going to talk about how to become a more consistently profitable trader, finding what works for you, crushing your retirement goals, pattern recognition and implementation, and the main factor that has improved seasonality trading for good. So please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. And this is also where you're going to find a recording of today's webinar. Before we get started, I need to share our disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. I'd like it if you could please take notes and write your questions down, but hold all your questions until after each presenter is finished. So I'd like to introduce to you Simon Klein of TradeSmart. Simon is the CEO and founder of TradeSmart, which is TradeSmartForex.com, which has quickly established itself as a leader in trading education, training, and coaching services. TradeSmart is also a provider of market analysis services to professional traders. Simon is a professional trader and trading coach with over 15 years of experience. He has a passion for trading and loves to train and coach others, whether it be a complete beginner or an experienced trader. Simon has taught and coached traders who work at the top Wall Street firms and other professionals from all over the world, including doctors, accountants, judges, lawyers, pilots, managers, and business owners. Simon graduated from University College London in 1996, and he began work as an analyst and programmer for Credit Suisse in both London and New York. And in 2005, Simon began his professional trading career as an equity trader for Generic Trading of Philadelphia after passing the Series 7 exam of the Financial Industry Regulatory Authority. Welcome.
Thank you for that introduction, Sherry. It's great to be here. A strategy alone is not enough. So let me ask you guys a question. And again, I don't know if I can see the chat. You can type it in the chat area. If you want to build a building, okay, so you guys want to answer that question. When do you start building the building? Do you start building it above ground, or do you do something else first? Just take the chat out. Organizers and panelists to everyone. Okay. And I should be able to see that in questions, I guess. Let me pull that. Okay. Okay, great. Hi, Sammy. Hi, Jane. Building a foundation. Okay, so yes. So the first thing you do when you start to build a building is you start with the foundations over here. Now, let me ask you a question. What would happen? And the foundations go on, this is underground, yeah? And the foundations happen underground. What would happen if you tried to build a building without foundations? Well, maybe something like this. The building may fall over. So a strategy alone is like building a building without foundations. Okay, just bear that in mind as we go through this. A strategy alone is like building a building without foundations, like building without foundations. And you know what happens to a building without foundations? It's going to fall over. So that's the end of the presentation. That's it. This is what I wanted to share with you today. No. So let's begin. So what we're going to do is we're going to go into the problem, and I'm going to share with you the solution. And the solution will be a the strategy basically of what you need to do. So the reason why this is so important, I've been training traders to success now for over 10 years. And these are the problems that I've noticed, and the problems that I noticed in my own trading at the beginning. And I've been trading for many years. And when I focused on strategy, it just didn't work for me. Just like if you focus on building a building, but you don't focus on building the foundations, then you could build a wonderful building, but it's going to fall over. It's not going to last. It's not going to be standing there in the future. So that's the problem. But what do you do about it, and what's the solution? So I'm going to share with you the solution. And the solution is exactly the strategy that you need to do in order to be a successful trader. Now, let me ask the question, how many people here are already successful traders? Or how many people have been through many trainings before and they haven't seen success? Now, over the past 3 years, I've specialized in training people that have been trading for 20, 30, 40 years without success. And finally, I've got these people, these traders, to the success that they so desperately desire and deserve after all the work they've put in. But they were missing something. They were missing those foundations. So this is why it's important for you to listen to what I'm going to share with you now, because this may very well be the key or a clue to uncover why you're not successful. And I've seen it so many times before, as I said before, many people trying to trade, following other people, but not being successful themselves. And we're talking about successful traders, we're not talking about, there's a whole world out there of unsuccessful traders who are training people as well. Here's a picture of me giving a presentation at the New York Traders Expo. And I was invited recently to speak in China along with ministers of finance and other traders. You can see it as me down here. You might know this trader or investor who's written books about trading, Jack Schwager. He's written many books, Market Wizards, and other traders here. Quick disclaimer before we begin, you can read that. Just bear in mind, all comments I make here are for educational purposes only. Here's a little bit more about me. As you know from Sherry, I've been trading for many years and training traders to success. I started my professional life at Credit Suisse, and I've contributed to many different trading venues. So let's start with the problem. And again, this is the next level problem. You forgot the foundations, but guess what? Many trading education businesses out there, there's many of them, and some of them are very, very good. So which one do you go to? And guess what? Most are focused on teaching you a strategy. Now, what do we say? They're focused on teaching you how to build the building, but not how to build the foundations before you put the structure up. They're focused on the strategy. So we're already one level in. When you build a building, you need engineers. You need to understand, civil engineers, to understand the forces, understand how deep those foundations need to go depending on how big a building you're going to build. It doesn't matter what building. If you have the same size building, for example, then I would imagine the foundations need to be the same for the same story height size building. It doesn't matter what type of building you build on top of it or what it looks like inside, or So most people are focused on strategy because guess what? From a marketing perspective, that's what sells. People want to know what to do to make money. So here's the strategy. Do this. But there's a big problem. Maybe the strategy does not fit you. Just because someone had a tailor-made suit, for example, that fits them doesn't mean it's going to fit you. And someone who's worked hard to acquire skills to build a strategy that fits them and it works for them doesn't mean it's necessarily going to work for you. And guess what happens? You fail. It works for them, but it doesn't work for you. The strategy works, but you can't get it to work for you because it doesn't fit your personality and lifestyle. For example, say you need to get across from one peak to another, from one mountain to another, and you like heights. You're a tightrope walker, so you may do the tightrope walk. But what happens if someone is scared of heights? That wouldn't be the optimum solution to get across from one peak to another. Maybe you want to take the bridge or a cable car or something like that. So just because someone else can do it doesn't mean it's fitting for you. And again, remember, we're focusing in on the strategy and not the foundations here. You need to have foundations before you build a strategy. So what is the solution? So these are the foundations, the frameworks that are going to get you the ultimate result. What's the ultimate result that everyone wants when they start trading? You can type it in the chat area. What's the ultimate result you want? You want to become a consistently profitable trader. So the first thing you need to do, in my opinion, from a framework perspective, is learn how to read the market. If you're going to become a trader who works with price action, with reading charts, and you need to know how to learn how to read them. You need to be able to read what's going on the chart. Now, just because you can read what's going on a chart doesn't mean you can turn that into a trading business. So the next logical step would be to learn how to run a trading business. What is the framework that you need to operate in? And I'm going to share with you both of these frameworks very briefly in this presentation, but you'll be able to take it away and start implementing it for yourself and see the results it will give you, or at least structure. Now, once you have that, what you need to do is develop a style of trading that fits you. So you need to understand your personality and lifestyle and develop a way of trading that fits you. And if you do all that, then you have a higher chance of success. So here's the obvious question now. How do I find what works for me? How do you find what works for you? What do you need to do? How do you do that? So you need to understand yourself a bit. You need to understand what your personality is. For example, are you conservative? That should be what it says. Are you conservative or you're aggressive? Are you patient or you have the need for speed? Are you able to wait for the market to set up? And sometimes you need a lot of patience, or you want to be in and out quickly. And again, your lifestyle. What time of day can you trade? Certain markets might not be available to you because you're sleeping. So which markets are you going to trade? When can you trade? You need to there's many markets out there. Which ones are you going to trade? Which ones fit you, your personality and lifestyle? So let's share with you how to read the market professionally, this framework for reading the market. And again, this is a framework that I developed and put together. There's nothing new in it. It's just the way I've pieced it together. All the parts by themselves are quite well known, some more than others. And the reason why it's so important to learn how to read the market professionally is because when I started out, I worked trading the New York Stock Exchange specialist system. And we were taught how to recognize what the New York Stock Exchange specialist was doing. And then basically, if this New York Stock Exchange specialist was buying, we'd be buying. If they were selling, we'd be selling. But we were taught to look at what the specialist was doing by watching the time and sales, the prints, the actual execution, the orders that went off, the actual trades that were executed on the time and sales. So what you saw the time and the price and how many shares were sold or bought. Because remember, every transaction is a buy and a sell. So it doesn't say buy, sell, because every transaction is a buy and a sell. If someone sold, someone must have bought. Someone bought, someone must have sold. So that's what we were taught to spot what the specialist was doing and then do what the specialist was doing. No charts needed at that point. So the problem was when the New York Stock Exchange went hybrid, part computer and part human, the system that I was taught to trade no longer worked. So it was back to the drawing board. So I decided that wouldn't it be a good idea to, after trying out many indicators and being very disenamored with them, they didn't really work for me. Going back to first principles and trying to understand what moves every market. And putting a framework in place that would enable me to read any market. And this is that framework. So let me share that with you. And the reason why it's so important is because it stands the test of time. It's based on supply and demand. And you will never have to learn anything else. Wouldn't it be a good idea to learn something that you would never have to learn anything else again? All you need to do is master this, and you know how to read a market. So these are the things that make up this framework. You need to understand pivot analysis, and I'm going to share with you towards the end how you can actually do that training. This is what I call how to read the trend, and we do that based on using candlesticks alone. Then you have to understand supply and demand, and then you have to understand what I call price direction. Again, this one very simple thing that will take about an hour and a half to learn how to do it can replace everything you know about Japanese candlesticks. You don't need anything else besides this. So it simplifies everything else. And how to do this on multiple time frames. So if you go down here, once you have a framework for reading the markets, the charts are going to teach you everything you need to know. Isn't that a good thing to know? Once you have that framework, the market now teaches you. You don't need anyone else once you have that framework in place. If you read the market within that framework every single day, and you start to see things, you'll start to understand what's going on in the market. You'll start to understand where to draw your supply and demand zones. You understand when the trend begins and ends, and you understand what direction price is moving in. So these are the only things that you need if you're becoming a price action trader based on price alone, no need for any indicators. So this is why this is so important, because you don't want to learn a method of trading that will be, the buzzword nowadays is disrupted. Think about Blockbuster Video, for example, or think of CDs or even records. Remember the old LPs, for those of you who are old enough here. And if you see now, the technology has changed, and what was now, what worked before no longer works or is no longer needed. It's disrupted. New technology comes and things change. So you don't want to have to keep changing the way you view the market or you read the market because new technology comes out or because things change, like what happened to me at the beginning when I was trading New York Stock Exchange stocks. So this is a way of reading the market that is timeless and will never change. So let's go back to basics here. And let me ask you a question. This candlestick over here, it's called a shooting star. Is this candlestick bullish or bearish? And I want everyone to type this in the chat area if you're watching this here live so I can see. If you're watching this recording, then maybe send me an email. You can send me to Simon@TradeSmart for us to come and tell me, is this bullish or bearish? Again, like everything else in life, if you put in effort, whatever you put into life is what you get out of it. So if you sit back passively and just, when you're not fully focused on what we're going over here, you're not going to get the most out of it. So definitely focus. So we're seeing that shooting star bearish. I'm looking at my other screen, what comes up here. Yeah, so generally we're taught that this is bearish. Now, let me ask you a question. Here we have a chart and we have 1, 2, 3, 4, 5, the 6th bar up. The question is this a bearish bar? That's a shooting star, correct? After a move up in price, is that bar bullish or bearish? Well, let's go and have a look at what happened to it. The market doesn't seem to be wanting to go down. And the conclusion we come to here is this may be a bullish bar because guess what? The market didn't go down. And what happens when most people see this bar? I asked this question to a group of traders at the New York Traders Expo not so long ago when we were able to meet in person. And almost everyone put their hand up and said, this is bearish. But what does the market actually do? Most people are thinking this, but does that give you an edge? And this is what actually happened. I took pictures of this as this played out. And this was a trade we actually took on the long side in our trading. We said buy here, target 1, target 2. And you can see exactly what happened. The market went up. Now, let's go back to that framework that I said, and let's answer those 3 questions. Again, we're looking not even on multiple time frames here. We're looking at one time frame, so 1 hour chart. Let's ask 3 questions. Let's ask what we're doing in terms of trend. So here we've got a higher low, higher high. So from a trend perspective, we're moving to the upside. So if you ask the question, should you be, do you want to be on the sell side if we're moving up from a trend perspective? No, you want to be on the buy side. So let's ask the next question. From a price direction perspective, which direction is price moving in? So I can tell you without going into the details, because it'll take me an hour and a half, and we don't have time to do that here, but you can I'll share with you how you can come and join our trading room and actually see this in action every single day. So here we have price direction is changing to the upside and we're pointing up, and we're still pointing up when this bar closes and still pointing up. So from a direction perspective, we're going to the upside. Now, the third question we need to ask ourselves is supply and demand. Now you can see that we have zones drawn on the charts. These are areas of supply and demand. Obviously, it's above, it's supply. If it's beneath you, it's demand. And sometimes an area can change from supply to demand. Now, what happened on this candlestick is the price moved above. So this was supply. You can see price dropped down here, price dropped down here, and then we come back again for the third time and break it. So from this perspective, we just cleared above supply. So there's no supply here. So why should the market go down until it gets to the next supply area? It just consolidates sideways and then carries on to the next level. You can see this is supply, market dropped, and then it goes to the next level. So we have three reasons why, from a price action perspective, why you should be on the buy side and not on the sell side. So why would you ever sell here just by saying, oh, this is a bearish candlestick? You need the framework. Once you have a framework for reading the market, you know what to do almost all the time. And you know when to sit on your hands when nothing's clear as well. So here you clearly want to be on the buy side. There's no reason to sell at all. Three reasons to buy. Remember, if you ask the question 3 times from 3 different perspectives, it's like a stool. Put a stool on one leg, you can get, it may wobble over. 2, may also wobble over. 3, it becomes stable. So you have a 3-prong approach, even though each one of these approaches by itself will work as well. And one of my traders, who's probably here, Jane, actually verified that. I verified it as well, but someone else who actually traded based on just supply and demand, or just on the trend, or just on price direction, and each of them gave an edge that was able to produce positive results, consistent profits. Put them all together, it's even better. So this is the first thing that you need to learn how to do, how to read a market professionally. The next part of the framework is you need to learn how to run a trading business. This is the framework for running your business. What do you do when you've got a, when you know how to read the market? What do you do now? So like every business, the first thing you need to understand is goals. You need to understand your why. Why do you want to trade? Why do you want to trade? Again, you can write it in the chat area if you want, for those of you who are here live, or ask yourself a question, write this down. Why do I want to trade? And answer it. Because that is going to give you a big picture reason why you're doing what you're doing. If you don't have a big enough why, then you won't be able to figure out how. Most people start with the how. How am I going to do it? And they go, well, I don't know. I'll do this course, I'll do that course, and nothing seems to work. But if you have a big enough why, then you'll figure out how. So you want to start with the why, give you a big picture reason. Do you really know why you want to trade? Ask yourself again. Why am I doing this? And guess what? To make money is not a good enough reason. There's many ways to make money. You don't have to trade to make money. So once you figured out your why and why you're doing it, maybe it's because you want freedom, freedom of time, freedom to live anywhere in the world, because that has internet. You can trade from anywhere. You can travel and trade. You can do whatever you want. It gives you freedom. I've traded at different, originally internet cafes, but now almost anywhere has internet. So I've traded all over the world in, coffee shops and whatever. You just set up your laptop, put some headphones on like I have now, and away you go. Order a coffee and sit down for half an hour and trade. So understand your goals. Why are you doing it? Now, why are trading goals important? Because guess what? They give you focus and direction. You need to have goals. A business needs to have goals. So you know where you're heading towards. And you need to know also when you go off track, how to get back on track. If you don't know where you're going, you don't know how you're going to get there. If you don't know where you're going and what your goal is, how are you ever going to get there? And guess what? It's also going to give you satisfaction when you achieve your goals, because that gives you a positive trading experience, even if you're not yet profitable, because you're not going to be profitable at the beginning. So, and if you are profitable at the beginning, it may be short lasting. All the people that I started trading with way back when, that were successful at the beginning, that were actually making money straight off, at the beginning, right at the beginning, are no longer trading anymore. I wasn't one of those people, and I was like, why am I not making money at the beginning? I was, it was a very hard learning curve for me, but it was worthwhile, because if you use that learning curve, if you don't look at failure as failure, you look at it as you either succeed or you learn, okay? If it's not working for you right now, learn why and improve. So as you move through your step-by-step milestones, you're going to feel good. You're moving in the right direction. And that gives you a positive trading experience. So what are your trading goals? For example, that could be to acquire expertise in reading the market. That may be your first goal. And then also you should set challenging and feasible goals. You want to be growing. You want to keep moving. If you're not growing, if you're not moving up, you're definitely going down. There's no such a thing as staying at the same level. You've got to constantly be improving, constantly be growing. And you should set goals according to your level of mastery. If you're already consistently profitable and making a certain amount of money every day and trading, you should start upping your size, or, managing your trades in a way, adding to winning positions, for example, so that you can start maximizing your winning trades. Many different ways you can do it, learning different management strategies. And realistic goals lead to a sense of accomplishment and progress, because remember, just like a seed that you plant into the ground, what does it do before it grows? It rots, and when it looks like it's all over, that's when it starts to sprout and grow. So too, a lot of where, the process of developing as a trader feels like we're underground, it's dark. You got to go through that in order to start growing. The next question you need to ask yourself is, how committed are you? Now, there's a saying I always like, I heard this, I think maybe from Tony Robbins. And I mentioned it as well, because people used to ask me at the beginning when I started trading, and they said to me, what's your plan B if it doesn't work? I said, I don't have a plan B. I've got a plan A. I'm going to make it work no matter what. And it wasn't easy. You can ask my wife. It wasn't very easy at all. The first, number of years were very difficult. And where does this saying come from? Everyone's heard the saying to burn his boats, or to burn your bridges, or whatever, This comes from the former governor of New Spain. And in 1519, his name was Hernan Cortez. And in 1519, during the Spanish conquest of Mexico, when Hernan Cortez was the Spanish commander, he had to win the battle. So he scuttled his ships, so his men would have to conquer or die. They had 11 ships, and they were against a big army. And he told them, burn the boats, burn the boats. What happened then? They had no choice. There was no escape. There was no way out. They had to make it work. That's a level of commitment you need, really, not just for trading, for anything, because something magical happens when you're 100% committed to success and you have a big enough why. You generally succeed. Many people are not successful traders, maybe because they don't have a big enough why, or they're not as committed as they think they are. So if you go all in, you're 100% and play all out and do everything that, and again, you need the right education as well and training, otherwise you might just end up going round and round in circles, yeah? So that's where the saying, burn your boats, burn his boat. He burned his boats, Hernan Cortez. And that was a kind of monumental moment, and they actually went on to win that battle. So the question is, how committed are you? Will you invest in an education and training? Are you going to try and do it by yourself? Or are you going to, the best way and quickest way nowadays, since we live in this education revolution, is to go and find someone who's already succeeded at it, at what you want to achieve, and learn from them. Wouldn't that kind of speed up the process? Or you can do it by trial and error yourself, which is what I did at the beginning. And I did have some trading mentors as well, but until you find your own way. Will you work on yourself? Remember, if someone would have told me, to become a successful trader, you need to work on yourself, I was like, what? No, I just need to make money. Yeah, that's why we all kind of start out trading initially. Yeah, And we realize it's a lot more deeper work that you need to do on yourself to get yourself into a peak state, to be the best version of yourself you can be, to get out of your own way and, trade successfully. Another big one is, are you going to learn from your mistakes and failures? Or are you going to blame everyone else but yourself? If you blame other people for your successes or for your failures and mistakes, then there's nothing you can do, because it's not you, it's someone else, something else. It's your education, your training, your mentor, or whatever it was, or the course you did, it was useless, whatever. But if it's everything outside of yourself, then there's nothing you can do about it, is there? So if you have to take 100% responsibility for your actions in the market and for what you do, and then you can start learning from your mistakes and failures. Will you do whatever it takes to succeed? The next thing you need to do is define your edge. Yeah, once you realize this is what I want to do and I'm going to succeed, you don't start out saying, I'm not going to succeed, and then start. No, you start out with, with a vision of yourself, with a goal of I'm going to succeed and I'm going to do what it takes. If you don't have that commitment, don't start. Trading may not be for you. So the next thing you need to do is define your edge. What is an edge? So an edge is an advantage you have over others. So what exactly is a technical edge in the market? So that's when you recognize when the odds in the market are in your favor. Ask yourself the question, who's on the other side of your trade? If you don't know who's on the other side of your trade, then maybe you're the novice trader and the professional's on the other side of your trade. So again, very important thing to ask. You need to know when you're taking a trade that you have an edge and your edge works and you can trade it. Otherwise, you shouldn't be trading. So the question is, do you know what your edge is? Now, this is very difficult for many people. Now, I want to ask you guys, do you want to, for those of you who are here, or if you're at home watching this or watching the replay, write down what your edge is. Do you have an edge? Yes or no? Type it in the chat area. Yes if you have, no if you don't. I see a nope. So do you have an edge? What is it? And here's the kind of showstopper for many people here. If you cannot clearly explain what your edge is, guess what? You don't have one. And the next thing that follows on from this is, if you don't have an edge, do not trade. There's no chance that you're going to make consistent money in the markets if you don't have an edge. And if you don't know what your edge is, you don't have an edge. So don't trade until you have an edge. And the next thing is, you may have an edge, but have you proven your edge? You may have an edge, okay, but have you proven that it works? Does your edge have what we call a positive expectancy? Are you going to make money over time? You might not make money on every trade. Of course, you're going to have losing trades. But do you make money over enough trades? That means your average, for example, if you were a salesman, for example, and you go door-to-door sales and you have to get 99 no's before you get one yes. But that one yes, you make $100,000. So no, 99 times on the 100 times you make $100,000. So how much was each, knock on the door, how much was that worth to you? So you do 100,000 divided by 1,000. Sorry, 100,000 divided by 100, you knocked on 100 doors. $1,000. So every time you knocked on the door and the person said no, you just made $1,000. Even though you didn't, but on average, over 100 knocks on the door, you make one sale. You need to know what your numbers are. And if you haven't, you shouldn't be trading without knowing what your numbers are. Now the question is, now you know what your numbers is, or what your numbers are, I should say. Can you successfully trade your edge? You know what the numbers are, but can you do it in the live market with real money? You've proven it works, but can you do it with real money on the line? Can you successfully trade your edge? Does it fit your personality and lifestyle? Those are the questions that you need to ask yourself. Okay, the next thing you need to do is you need a trading framework. Okay, this is what you need. You need a trading plan, and in the trading plan, you have money management rules, risk management, trading strategies, for example. Then you have a trading log where you log your trades, very important, and a trading journal. The next thing that you need is to understand the trading process. Within the process of trading, once you've got the framework, you have routines. For example, how do you prepare to trade? You need to ask yourself 2 questions. Am I ready to trade? And is the market ready? If you can't answer yes to either of those questions or to both of those questions, then you shouldn't be trading. You've got to be ready and the market's got to be ready. Sometimes you're ready and the market's not showing you anything, there's nothing to do. Or sometimes the market's, ready, but you can't trade at that time. So that's not the ideal time to trade. And then you need patience. You need to wait for the market to show you your edge. And then you need discipline, which means the ability to follow a set of rules. So by definition, if you don't have a trading plan, you can't be disciplined as a trader because you don't have a set of rules. And you have to have them written down. And then the final thing is, once you do all that and you do it successfully, your psychology and emotions, you should be confident. And a lot of these issues may go away once you have that confidence in your trading. Now, I think a lot of the time, people's psychology or emotions are kind of exaggerated because they're not doing anything else right. And therefore, they end up losing money and it kind of blows everything out of proportion. And getting into a negative state will produce more of the same. And you end up going round and round in circles. And every day you come back and say, I'm not gonna make those mistakes again. You don't know what mistakes you're making, but and then you do the same thing again, and you go round and round in circles. So you don't want to go round and round in circles. You want to go like a spiral. Every time you go round, you want to go up, get better, improve every time you go round the process. I'm going to share with you what the process is in a couple of minutes. And you need some way of measuring your progress to know that you're not just going round and round in circles, you're actually improving over time. So here's an example. You can write this down. I'll take a screenshot once I've gone through it and do this for yourself, and you'll see it will help you be more organized as a trader. So first thing you need to do is prepare yourself to trade. Then what you need to do is you need to analyze the markets. You trade with a view to find trading opportunities that are in your trading plan. So you have to know what an opportunity looks like. That was one of the questions I had at the beginning is, I was taught strategy, but how do I spot opportunity? And sometimes, the strategy won't work because it's in the wrong market conditions, if you see what I mean. That's why you need to understand, not only if you use the analogy of driving, how to drive a car, you need to understand how to read road conditions as well, so that you drive correctly in the right road conditions. Third thing, you have to wait for the market to show you a trading opportunity in your trading plan. And here we start with the framework here, the trading plan. Then you take the trade when you see the opportunity. And this is what you can do. Take a picture of your trade entry because that's where you made the decision to take the trade. Then write down your entry in a trading journal. Manage the trade according to your trading plan. Take a picture after the trade's completed. Then take a picture of what happened next. Enter the trade in your trading log. Then write an entry in your trading journal. So this is what you should be doing on a trade by trade basis. Yeah. And again, take a picture of this and actually do this, implement it and see how it can actually start to get you organized and disciplined in your trading. And again, you need all the other components as well, but this is how to this is the process. This is what I do every single day. So let me share with you a success story. And I think Jane's actually here. She came to me at the beginning of, I think, about 4 years ago, and it took her from nothing to consistent profits following what I'm going to share with you soon. 3 months to get there. She went through the training, how to read the trend, and came and joined our trading room. And that's what she started with. And then since then, she's done the rest of the training. And this is what she said. Now, the important thing is listen carefully to what she says here because you're going to learn something from it. It's not just I'm not just sharing this with you because I want to sell you something. I want to share this with you because you're going to learn something from it. It's going to help with you. And even if you don't take the next step, at least you come away from here with some value, okay? So this is what Jane says. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it's really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis. Use the demand and supply levels and adapt it to your own trading style. Be very disciplined. Don't be greedy. Stop when you've made your daily profit and you will turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I mainly trade the NQ and CL. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you the confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it's the best and only training to succeed with. Now, the best investment you can make in life is in yourself. Remember, I think someone asked Warren Buffett, what's the best investment you've ever made? He goes, in myself. I think it was Warren Buffett. I remember hearing something like that recently. And I heard this from Tony Robbins in the name of Jim Rohn. For things to change, you have to change. If you want to change your life and things get better, you have to get better. You have to start improving yourself, working on yourself. And what I'm sharing with you today, if you just listen to it and don't do anything with it, you're not going to get results. You've got to let your knowledge lead to action. So take a picture, or when you go back through the recording of this, take a picture of those step-by-step of the framework, and actually start building for yourself. If you can try and do it yourself, a trading plan. Log your trades in a trade log. Write a trading journal. Keep pictures of every single trade you do. Go over every trade, and that way you'll start to improve trade by trade. So the best investment you can ever make in yourself, in life, is in yourself, because if you become a better person, then and better at what you're doing, then every day of your life going forward is going to be better. So now you've seen a simple and powerful approach to learning how to trade. This is exactly the frameworks that you need to put in place and learn. You need to learn how to read the market. You need to understand how to run a trading business, and then you need to actually do it. So the first step that you need to do is learn how to read the trend. That's stage one of learning how to read the market professionally, is learning how to read the trend using pivot analysis. And this is a step for those of you who are ready to start. This is where to start. And the benefits of doing this training of how to read the trend is this. Make sure that you trade in the direction of the trend. The trend is your friend until the bend in the end. You'll know exactly when the trend begins and exactly when the trend ends. And make sure you're never fighting the trend. Make sure you're on the right side of the market. You can develop a profitable trading strategy with this, or enhance an existing strategy. So I invite you to join my How to Read the Trend training session plus trading room. And it's trading room for 1 month. I'll share with you this. This is what you're going to learn. You're going to learn exactly how to identify the current trend of the market, how to do that in multiple time frames, exactly when a trend begins and ends, and how this knowledge is going to dramatically affect your bottom line. And you'll be able to watch us analyze and trade the live markets in real time every day. We have a weekly preparation session on Sunday where we set up for the week. And I was audited by a postdoctoral research fellow at Princeton University who actually went through about 7 months worth of data of my analysis and everything, and he came out with an accuracy around 85%, and this was over 3 years ago, just to let you know. So you're going to learn how to read the market, and once you see what the market's doing, you'll end up being able to take better trades, or you end up seeing the opportunities. So here's what people are saying. Leanne, before attending one of Simon's webinars, I spent decades trading various markets, including stocks, penny stocks, options, futures, and my losses far outweighed my gains. When he showed me his clean charts with the supply and demand levels marked out and talked of reading the market through only price action with no other indicators, add-ons, or signal services, it struck a chord with me. Over the last years, I've attended trading forums, many webinars, and purchased a few online trading packages and joined a number of different trading rooms for a time, but I didn't find anything that was actionable for me. I recognize that Simon is a genuine and honest person, and what he's willing to teach is the holy grail in trading that I have been looking for. Ernest, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's been the wrong process. I've wasted tons of money, time, and effort. I've actively deleted all of those programs, indicators, etc., and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. Tom, I want to say that what you teach in How to Read the Trend training course is brilliant. Before that, I picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. So this is what you get. It's about an hour and a half. Again, I'm very conscious of people's time. Time is precious, most precious asset we have. So you don't want to spend hours and hours and hours learning. It takes you an hour and a half, and you can go through it many times and get a deeper understanding and then put it into practice. It's on demand. You can watch it as many times as you want. You get personal access to me, and you're going to come and join our live trading room for 1 month and our community of traders. You're not going to be alone 24/7. We have a Discord server and premium channels in there where people share, and you can ask questions, where people share, sometimes trade live together. You can trade with other traders as well beyond what we do in the trading room. We have people in every single time zone in the world, so you can hook up with people, ask questions, share your charts. You can speak to people as well, and not just via typing. You can actually video conference them. And this is what it looks like. And it's improving all the time. We've got a number of people in there, some very experienced traders that are willing to help and share ideas, especially around the Nasdaq cash open, the Nasdaq market. So join now. The regular price is $894. The deadline's 2 days from now, or whenever you're watching this. You're going to receive $497 off. So basically, you pay $397. And I want to show you, this is the link to go to. I don't know if you can put that in the chat area, Sherry. If you just type this into your browser, you can't click on this because it's a video. TradeSmartForex.com/promo. And I'll show you exactly what
I did put it in the chat.
Okay, thanks. So basically, it will bring you to a checkout. You go through the checkout, and then it will send you your login credentials. You can go to my website here and you click on members. It brings you to the membership portal. Now, how to read the trend is in this training over here. So you click in here, and everything about the trading room is in there, and all the recordings. Every single session is recorded. You can watch it. If you can't make it live, you can watch the recording, or you can do both. You can be there live and then go over the recordings and learn from that. So that's what's on offer. So again, join now. How to read the trends, $397. 1 month in the live trading room is $497. That's a total of $894. Today, $397. Start your journey now. If you keep going round and round in circles and whatever you've done up to now is not working, then start here and get on track if you really want to be a successful trader. And if you're just starting out, this is a great place to start as well. And you have the advantage of not building bad habits or doing things the wrong way, because undoing bad habits is very difficult. And I work with a lot of coaching clients to get them to success. And many that have been trading for a long time have built up bad habits over the years. And it's easier to form a new habit than break an older habit, a bad habit. So again, there's a link. And what I'll do now is open up for, I think we've got about a minute for any questions. And again, if you have any questions beyond what we can answer now, you can send me an email to simon@tradesmartforex.com. It's over here. So at this point, I want to say a huge thank you to all of you for spending the time watching this. I hope you got a tremendous value. Even if you're not going to take the next step, watch this over again, take the value from this. And at some point in the future, if this is what you want to do, then come and join. If you want to do it now and we're ready, this is what I want to do. I look forward to welcoming you tomorrow in our live trading room. So again, this is a link. And let me see if we have any questions. Let's pull this over. Where we go. Just want to scroll through this. Does this course teach, do you have any funded traders using your system? Yeah, most of the traders are funded. I mean, they've got their own funding or they're trading other people's money. Does the course teach risk management and position sizing? Not this particular course. I mean, the full course, yes, but this is just one part of it, which is a standalone how to read the trend. You will pick up position sizing and risk management. We talk about it in the trading room every single day as well. So you'll see us put it into practice. We do have a training on, the wider course will teach everything on that. I basically have the training split up into those two frameworks. One is learn how to read the market professionally, which is session 1 of that. It's a 5-session training. Session 1 is how to read the trend. And then there's how to run a trading business, which is also a 5-session training. And one of those sessions focuses on all the management, risk management, trade management, and money management. There's a whole session on that. And some of the interesting questions we ask in that, and we answer them, is how do you actually, I'll give you this question, you can think about it for those of you watching this and see if you can come up with an answer. And again, how about this? Anyone who has the right answer to this, I'll give you 1 month free in the live trading room. So you can send me an email. Those of you who are not already members, yeah, send me an email to here and give me the answer to this question. How do you make more money on a trade without ever risking more? How can you make more without ever risking more? There is a possible way of making more money without ever risking. It sounds like, wow, how do you do that? How can I make more money without risking more? Yes, you can. So anyone who sends me the right answer to that question, I'll give you 1 month access to the live trading room. Okay, let's see what else we have.
Sounds like a deal to me.
I just thought I'd throw that one in now. Yes. And just, I want to point something out. I feel, very strongly about this, and why I'm doing this is because I've helped change people's lives, literally. And if this is something that can help change your life, and I could be, the one to help you change your life, then I'd be, it'll be the utmost honor to do that. And I feel that, if I don't share this with you, then I'm doing an injustice. I have the answers to the questions that you're looking for, and I can help you get the results that you're searching for. And so, this is why I'm sharing this with you. I went through a difficult journey myself, and I know how to get myself out of falling down a hole and get myself, so I can help you do the same, because I've been there. Sammy, you know the answer already.
What
Okay,
about Rosina? She asked, do you look at volumes, market profile, order book, etc.?
Certain markets, yeah, if I was trading equity market, then I would look at volume or trading equities. But if I'm trading, futures and forex and whatever, it depends on the market. Then no.
Okay, cool.
I look purely, again, if you can see everything that you need to see in the candlesticks and the charts, why do you need to add anything else?
Right.
You want to keep it as simple as possible so that you can, I always thought if you go traveling, you want to take what you need, nothing more, nothing less. The more you take, the heavier it is, and the more you have to lug around. You don't want to take, and most of the time you won't use all of it. So yeah. So what you want to do is, travel light and have all the tools you need to make the correct decisions.
All right.
Here you go. So Jane saying the answer, trade with me is that. Yeah. By the way, I wanted to share this with you. Jane, who I shared with you, who I actually, this is the beautiful thing about this. Jane came to me, as I said, 4 years ago, and she is now training. You saw the course Trade NQ at the Cash Open over here. That's a course that Jane put together. It's 6 sessions, and 3 of the sessions where she traded live, we recorded it, and no losing trades off the open. Some of the trades were done and dusted in a couple of minutes and finished, done for the day. So Jane's fast and furious. That's her personality. She trades and works at the same time, and she trades the Cash Open, and she's done most days in half an hour or less. So, and she's teaching other people how to do that. So that's the next stage, when you have one of your students who's now teaching others. So that's a wonderful thing,
Mm-hmm. All right.
Okay, so
thank you.
Sherry, thank you so much. And thank you,
Thanks for being with us.
everyone else for being here. And I look forward to helping you on your trading journey. Thanks a lot, everyone.
Awesome. Thank you. Bye now. All right. Now, I just want to let you know that if you need to leave early, you can listen to this webinar. You go to tradersexclusive.com, and at the right-hand side over here, you see Trading Education Webinars. And when you click that, you come to this page where you can see all of the dates that we're going to be doing webinars and live events for 2022. And you click here, right here, where that green arrow is pointing. There won't be a green arrow on the website, but you click there, and then it takes you to the page where all of our videos are posted. It's tradersexclusive.com/archived_webinars. So you check that out. And now I want to introduce Stephen Quetzal of the Traders Plan. He's going to talk to us about how to create weekly income, less than 20 minutes a week. And he looks really young, doesn't he? He's got a lot of knowledge, and he just looks great for his age.
I appreciate it.
Stephen bought his. Let me just do your bio, and then you can take it away.
Oh yeah.
Stephen bought his first stock at the age of 14, and the rest is history. Being a former financial advisor at a local broker dealer and watching portfolios crash in 2008 forced him to abandon the buy and hold and create a simple 3-step trading system that anyone can follow. That's probably the most succinct bio I've ever introduced anyone with. So thank you for being with us.
Absolutely.
Now, do you like to take your questions on the fly, or do you prefer to hold them till the end?
I probably prefer to hold them to the end, and I can always flip back through the slides.
All right, then I'm
A
going
lot
to make
of
you.
things I can probably go back to. So
All right, there you go.
Can everybody see my face, my screen, how to create weekly income?
Yes.
So you're looking at
Great
that.
slide.
Yeah, I look young, but unfortunately, I'm not as young as I look. So that's all right though. I'll take it. So Simon was great. I think him and I are cut from the same cloth. He quoted Warren Buffett. He believes in rules, and that's what I'm going to talk about today. And Sherry, since we are starting a little bit about 12 minutes behind, I'm assuming I can go over just a little bit to complete the presentation.
Take your 45.
Take my 45. I like it. Okay. So I'm going to get started right here to be respectful of the person behind me. If everybody can see my face, this is me, Stephen Cawiezell with the TradeSmart.com. I really appreciate Sherry for inviting me, and thank you for all for taking the time to listen to me. I value your time. Before we get started, I really wanted to do you the courtesy of letting you know what I'm about to discuss and who I've built this for. Now, as the title suggests, I'm going to teach you how to build a weekly income stream from trading, and yes, it literally takes 20 minutes per week, and once it's all in place. So I treat trading like a business, and so do the majority of my members. Now, if growing your wealth and not just hitting, but crushing your retirement goals is truly important, then I built this for you. My systems work, and additionally, I personally make sure that anyone who works with me knows how to execute them with ease. Bottom line is I make money from this process, and my friends and my family and my students, they all earn income with me. So without further ado, please shut off all distractions. In the next 45 minutes or so, I'm going to give you the exact process and strategy that has served the foundation key earner in my business. Because make no mistake, if you're going to be truly successful, we've got to treat trading like a business. So without further ado, I'd like to start off with a quote from Warren Buffett, the man. And I know we just listened to Warren Buffett, and I can never get enough of him. But here's what he said. He said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." What is he really saying when he says that? All he's saying is, I like to buy high quality stocks on a pullback. That's it. That's exactly what that statement means. I want to like buying high quality stocks on a pullback. And this is actually, one could argue, this was Charles Munger talking through him, because back in the early 70s, Charles Munger, his business partner, really convinced him, like, hey, instead of buying these mediocre companies in the gutter, why don't we buy some high quality names just at a fair price? So it really changed his way of thinking. He was already doing good in the late 60s, but it's really he really crushed it for decades on decades once his mental mind shifted. And that's exactly what we're going to do today. That's exactly the rules-based system I'm going to teach you today. I'm going to teach you a system on how to buy high quality stocks on a pullback. Okay, let's look at a chart of Zoom. Okay, now to be clear, all the charts we're looking at are going to be weekly charts. Okay, very simple weekly charts, so don't get confused with daily. A lot's going on this chart, and let's just talk about it here for a second. We'll talk about Zoom. It IPO'd, right? This was before the pandemic, and it was really exciting, right? Shot up, shot up. It looks like it easily doubled in the first 2 months of trading. So what happens right here is you kind of have this FOMO, right? This fear of missing out, and people are buying with no real rules or plan. And then you have another batch of traders. It's like, I'm going to buy on a pullback. So they buying on a pullback, and they're getting stopped out along the way because, again, they're just buying a straight pullback. There's no real rhyme or reason to it, no rules to follow. And there is a specific set of rules that can really help you time this really well. And that's this 4-bar pattern. This 4-bar pattern that I'm about to teach you, I'm going to give you the exact rules, when to get in, when to get out. And what's funny is this exact 4-bar pattern was the absolute bottom in Zoom before it went from $80 to $600. Now, I think that's what Peter Lynch would call, I think, a 7-bagger, right? 7x your money. I think we all know that not every stock is going to be a Zoom. And believe me, they don't have to be. But this pattern pops up again and again, and it's abundant every single week. So to really be able to time the bottom really appropriately, buy high quality on a pullback, we have to follow these set of rules. It's because once, as you can see, if you would have placed this trade, right, it just would have slingshotted you forward. Now let's look at a stock that wasn't a Zoom, right, that maybe didn't go up 700%, but was a nice little income trade. Okay, this is CAR, C-A-R, I believe that's Avis Budget Rental. And when we think of car rentals, we don't think of anything exciting, right? It's not a hot, tech stock. It's not anything exciting. It's not changing the way we live. But look at this trend right here. Look at all this green. You have, I don't know, about 15 to 20 weeks and in a row of just straight up move, and you only had one red bar that barely pulled back. So you have this really, really nice uptrend, and I would call this a high quality stock, okay? Because it went from 35 to 80, it doubled, okay? Then it started to go into correction mode. But what's interesting is this 4-bar pattern that I just showed you on Zoom, it popped up again and again, and it popped up right at the bottom, right when the stock made its deepest pullback this whole move. So when you see this pattern, which I'm going to share with you the rules in a minute, you enter at the open on Monday, and then boom, this absolutely took off. And what I love about this system, what I love about this pattern is it's going to put you in front of stocks that you're not necessarily aware of, right? You're not necessarily thinking car rentals are going to just make me a ton of money this year, but it did, right? And it was a very, very nice income trade. So not all have to be 7-baggers. Before we get into the rules, I want to talk a little psychology for a second, because I think this is incredibly important. I've talked to thousands of traders over the years and investors, even going back to my retirement planning days, and I created this stages, right? And I found some of it online, kind of added to it. But what I have found over the years that traders fall into one of 3 stages. Now, you have stage 1. Let's just start here for a second. Stage 1 is usually the new guy, the beginner trader, or the trader, let's say they just started a new trading system. Maybe they've been trading for a few years, just started a new trading system, or they're brand new to trading, right? So there's that new factor, okay? So what happens when you have the new factor? Well, new is exciting, right? So when you're excited about a new system, new process, you get a little confident, you get a little overconfident, and you're easily influenced. Means every little move you want to get in, you want to get out, so you're so quick to pull the trigger. Now, the problem with that is when you're easily influenced and you're overconfident because the numbers look great, you get a little lawless, right? You start to get really, really loose on your rules, or you have no rules at all. And what happens when you have no rules at all, or you get lawless, you're going to hit that string of trades that doesn't work out. And it's going to knock you down a peg or two, right? So then you move over to stage 2. So you're like, okay, Steven, I'm going to brush this off. And then you go and you're determined. You're like, okay, well, that didn't turn out the way I wanted, but you're semi-confident. You're rattled a little bit. And the stage 2 is very dangerous, because what I see in stage 2 is these traders, they go on this quest. And they say, I have to know everything about every stock, every indicator, every little system thing I can find. And they get stuck in this stage usually for several years at minimum. Okay, I've seen traders like stuck in this, I need to know everything about everything for decades. So it's just an information overload. And usually they realize that knowing every indicator is not the keys to the kingdom, right? It's not going to get you to be a consistently profitable trader, because you might end up become jack of all trades, but you're master of none, right? So you get stuck in this stage two until you realize mentally, I know all this stuff, but I don't know how to put it into play, or I just have too many irons in the fire. So then you get frustrated, you move over to stage three, and you really feel lost, like you throw up your hands. Man, I don't know what to do from here. I'm lost. I don't have any confidence. I'm frustrated. I feel stuck. But this home run seeker, this is a very dangerous place to be. And I can't tell you how many new customers or just people that would email me and say, hey, Steve, I haven't done well, from a previous service, or I've been trying to do this on my own, and I made some really, really big mistakes. And I just need a double or triple to get back to break even. If you could just do that for me, that would be great. As if that's an easy thing to do, as if I could just go to my desk and print a double or a triple on the spot. That's a very dangerous place to trade from. It's, home run seeking, but it's also called revenge trading as well. And no one needs to be in that mental state, because nothing good is going to happen. The chance of you hitting that home run are rare. The chances of you getting deeper into a hole are highly likely, okay? And this mentality, this is just, it's very, very common, right? And it doesn't end well. So eventually you're in stage three until you see something else, maybe another system, maybe another process, something else, something new, and then you go to stage one, and it starts all over again, right? It's really this vicious cycle that I've seen traders be in. Now, what I've seen is the real problem is not just being stuck in a certain stage, right? The biggest obstacle, or the biggest objective that I have issue that traders have, is they have no objective rules-based system. They have no objective rules-based trade plan. When I say objective, I mean a written set of rules that's going to help you make money on the upside and protect what you work so hard for on the downside. Okay, so my big promise to you today, and it is a big promise, I understand, I'm going to teach you an objective rules-based trade plan. I'm going to give you the money management rules on when to get in, when to get out. So I'm going to give you the system. I'm going to tell you when to get in, when to get out. We're going to look at some real live examples, and I'm going to show you how to do this in only 20 minutes per week. All right, I understand that's a tall order, but if you pay attention, you're going to be pretty pleased probably in the next 20 minutes or so. So real quick, I'm going to make the lawyers happy and give you a few seconds to read the disclosure. Okay, lawyers are happy. All right, a little bit about me, just so you know who is on the other end of the screen, who's talking. This is me right here, Stephen Quetzal. I live in the small working class town of Russellville, Arkansas. I'm a former financial advisor turned trader publisher. I made that switch back in 2013. When I was in asset management, I worked in a practice with 60 million assets under management. I'm the author of Expert Trading Systems, which you can purchase on Amazon. I'm the head founder and trader of thetradersplan.com. What I am most proud of, and what really gets me out of bed in the morning, is I've helped thousands of traders set up a rules-based system. And that's what we're going to talk about today. Now, what makes this easy? What makes what I'm about to teach you easy? Well, for one, there is zero fundamental analysis involved, just price and volume. There are only 3 rules, and you could literally write these on a Post-it note. So anyone who's sitting at a desk in front of your computer, if you got a Post-it note, I challenge you to pull that Post-it note out and get your pen ready, because I'm going to give you the rules, and you can literally stick it to your computer screen. It's that easy. And it only takes 20 minutes per week. Okay, I do not believe that staring at stocks all day long are going to help them move at all. Like, I do not want to stare at the screen all day. It's not going to make my stocks move anymore. I like to place my orders, my targets, and then go fishing, go golfing, go do what I enjoy doing, or enjoy whatever you love doing. Now, this is a once per week setup. So when studying the bottoms of stocks, I noticed that there are certain qualities they have before they turn into winning trades. Now, in order to really identify this money-making setup, we got to recognize the qualities before they make their big move. Now I've narrowed down these qualities into a rules-based system that we're about to talk about, okay? So let's give this a bird's eye view for a second. This is the process and this is what we do. We spend 15 minutes on the weekend, maybe a Sunday morning with some coffee, going through our scan to find the best setups. Once we find those, on Monday morning, we're going to place our market order right at the market open. So 15 minutes to go through the scan, 5 minutes to place the order. I doubt it takes you that long. 20 minutes total, and then just rinse and repeat. Okay, just rinse and repeat. So after you place your order, you set your targets, your stop losses, go golfing, go do something. Go do something else. Okay, so I told you we're going to look at CrowdStrike for our major case study. Okay, so this is CrowdStrike. This is a weekly chart. These are the 3 rules. I'm going to go through these rules one by one. And I told you that we could write these rules on a Post-it note. Okay, so these are the rules. You can write it on a Post-it note. And what I'm going to do is I'm going to go through these rules one by one. I'm going to explain what's going on, and I'm going to explain the psychology behind the rules so you really understand what's happening in this bottoming pattern, okay? So let's start with rule number 1. Remember, this is a weekly chart. Rule number 1, this reversal bar. We're going to call this the reversal bar. This reversal bar, right, once you kind of get a swing low, you're looking at a reversal bar. This reversal bar must undercut the prior 3 weeks. That means the low right here must be the lowest point of the previous 3 weeks. 1, 2, 3, check. Okay, now why do I do that? Why do I want this reverse bar to just wash out the previous 3 weeks? Well, how many times have you, let's say, bought here, put a stop loss here, only for the next bar to just gap down, you know, put in a bullish reversal candle and reverse and go in the intended direction? It happens. It happens, especially if you're losing stop losses. It's a nice shakeout, right? And I like shakeouts because you almost have to anticipate the shakeouts sometimes with trading. You say, okay, where's the market going to get me kind of mentality. So I would rather buy after the market has already shaken out other traders, right? Because that's usually the best time to buy. I mean, think about it this way. After you get stopped out, how many times do you just see it continue to take off as intended direction? Like I said, it happens. So, right, and another thing is it tried to break down, it failed. So this opened right here. It tried to break down lower. By the end of the week, it bullishly reversed up. So it failed to fail. And usually that means an above average move the other way. A false breakdown usually means an above average move the other way. So very, very simple. I want this low to undercut the previous 3 weeks. So I want a nice pullback, a nice shakeout, right? And then it can slingshot its way forward. Very simple rules. Now, rule number 2, this is as easy as can be, right? This reversal bar has to finish positive for the week, must close above the previous week's close. Now, why do I do that? Like, what is really the rules behind that? Well, I want it to finish positive for the week, okay, and I want it to close above the previous week's close because I want the bulls to be in charge. Okay, I want there to be enough support, enough bulls pushing up that stock. And this one worked really well, and this one didn't. Look, this has the setup of the reversal, right? It undercut the previous 3 weeks. And by the way, they don't have to be in order. The 3 weeks do not have to be in order. Okay, this doesn't have to be lower than this. This doesn't have to be lower than this. They can be in any order possible. Okay, but look, it opened here, right? It closed here, but it could not close above the previous week's close, right? It failed, right? The bulls were not in charge on this bar. It failed, and then the bulls were in charge in this bar, and it worked. Okay, so we just want the bulls to be in charge. Very easy. Rule number 3, and then this is the big one, must have above average volume. Okay, so not only do I want rule number 1 to undercut the previous 3 weeks, I want the bulls to be in charge in rule number 2. And rule number 3, I want there to be a lot of volume. And how I define above average volume is I just have a simple volume histogram, right here. Very easy. You can add it to absolutely any charting platform. And I put a 50 period moving average on this. So the reason why the blue line is right here and not over here is because this was an IPO, so there wasn't 50 periods to average yet. It started right here. So what does that mean? That means if the weekly volume is above the line, it's above average. If it's below the line, it's below average. So that is not a completed pattern. Now there is no blue line right here, but you can clearly see that it is above average, above all these weeks, above all these weeks. The institutions were piling in. Now I really like to see the smart money flow in, like the hedge funds, the mutual funds, pensions, really everything, right? Because they move the market. Now, when I see this kind of pattern and I see this kind of volume, one of two things are happening. Both are fine with me. So the first thing that's happening is maybe you have a bunch of mutual funds that own the stock. They don't want it going any lower. Okay, they say, hey, I'm not going to let this fall below 50 bucks. I'm a buyer at anything under 50. So they're supporting their stock. That's good, right? Because that means that the price is likely to hold that and probably start to float the other direction. Or option number two, a bunch of institutions don't own the stock yet and they're taking an initial position. Now, what's beautiful about option two is a bunch of institutions piling in is because they can't buy it all in one day. It takes, on average, it takes a mutual fund 3 to 6 months from start to finish their position. I mean, they're buying, $500 million worth of stock just to have a meaningful to small amount in their portfolio. If they buy it all in one day, they're going to jack up that price. It's going to go from 60 to 90, and they don't want to do that to themselves. So they have to buy it in increments. That's why it takes 3 to 6 months to complete their position. So when we see this kind of volume, and we know that it's likely that some mutual funds are piling in, and it's going to take 3 to 6 months to complete their position, that gives us an advantage. Because as retail traders, you and I mean, this isn't you and I right here, but we can see this and take advantage of it. You and I can hop on the bandwagon and ride their coattail all the way up. Okay, so very, very simple rules. So rule number one, must undercut the previous 3 weeks, check. Rule number two, must close above the previous week's close, check. Rule number three, must have above average volume. So it takes 4 bars total. Got this reversal bar, and then boom. It's really, really slingshots. This is an awesome, awesome pullback strategy, and we'll continue to look at more examples. So here's another one, CYTK. I've never heard of this stock before it popped up on my scanner, but I want to show you how abundant this pattern is. Every week the scanner can bring up anywhere from 5 to 60 stocks, and I'll show you how to narrow down the list. But I mean, look at right here. You have this clear uptrend that started, right? So you got a high quality. This is now a high quality stock. It probably gapped up on earnings right here. I'm just guessing. So it's in an uptrend, it's in an uptrend, it tries to fall below support, boom, you get a reversal, okay? You buy at the open on the following week, and then you make some money along the way. And then it tries to break down again, and then you get the reversal, right? And then you buy at the open. This one probably lost money because it kind of went straight down from there. But you know what? Look at this right here. You have an even deeper pullback from the previous two, and look at what happened at the exact bottom. You got another reversal pattern, okay? And this one went to the moon. In 1 week at the open, it went from 38 to 45, and that was just in that 1 week. I haven't checked the stock recently. This was at the end of December. We're going to look at some more updated alerts. But I mean, you can see right here, you won 2 out of 3. But, it pullback, reversal, pullback, reversal, pullback, mega reversal, right? It just, you'll see this pattern pop up again and again. And look right here. There's also one right here, right at the absolute bottom down here. You got a reversal bar, you get in, you made some nice money, and then you sell as it starts to break down, okay? So you have 4. So I challenge anyone who, has a watch list to really go through that watch list and just look and see how many you have. Here's another one, Fortinet, FTNT. I mean, that is a heck of a trend. Now, I know what you're saying, Stephen, you should have got in down here. By the way, look, there's a reversal at the lowest point on this chart, right? You could have got in right there, made some money, right? Probably are not sitting through that, but you know, it's just interesting. This is just a mega trend, and on the deepest pullback of this whole trend, you got a reversal right there, and then it absolutely takes off. Okay, so it's funny how that happens. It's funny how all of a sudden, if you're aware of this pattern, you're going to start to see it over and over, and then you're going to be like, that was a good entry, that was a good entry, should have done that, right? But the good thing is we can also, you know, trade these in real time. Here is two recent stocks that we bought and we still own. And by the way, that's not a buy sell recommendation. They're already extended now. They're already above their targets, but we do still own this. I mean, look right here. This was just a couple weeks ago. You got a pullback, and then you got a reversal in huge volume. And you know, we bought at the open on Monday, and we hit our price target. On this one, we hit our price target in the same day, and it's in an uptrend. This is holding up really nicely. When the market, and I just took this snapshot an hour ago, when the market is not looking so hot. Okay, so the idea is we're buying strong stocks on a pullback. This is a strong stock. It's in an uptrend. You can see another one right here. All right, you got a nice reversal pattern right there. Again, you'll see this over and over. So you got a reversal pattern right there, and then you got one right there. Okay. Here's another one we just recently took and still own, and already hit its target. And this was a couple weeks ago as well, right? You got a nice reversal pattern, right? You can see right here, it's going sideways, It tried to break down and then just reversed with the overall market, and the market has kind of fallen back down, and this is still floating up. So two very recent trades, and we're in the money, and you know, we have a free trade now because we've already sold partial and done take our money management rules are into play here. So it just pops up again and again. So that's the system rules. Now I'm going to give you the money management rules, and the money management rules are probably just as simple. You could write this down, and I have, by the way, put these money management rules. I've tested a lot of different things, and I like simple. I like simple and replicatable for the average trader. So you enter at the open on Monday. So if it's an end of week pattern, we're buying at the open on the following week. So we sell half at 8%, which is our target one. Once we hit our target one, we're going to raise our stop to break even on the remaining shares and let the rest run until it breaks the 50-day moving average. Stop loss is 10% on the whole position. So that means if I'm buying Apple at 100, I have a stop loss at 90. I have a partial target at 108. As soon as I hit 108, I'm selling half. I'm raising my stop loss on my remaining shares to 100, and I'm going to let the rest run as long as it wants to. And I treat all trades the same to get rid of the trade bias, because every single year it never fails. My biggest winner is not the one I thought it would be. Right? So that's why I just follow rules. I treat them all the same, and I'll let the stock tell me if it wants to go a lot higher or a little higher or whatever it wants to do. So can you do this? Can you spend 25 minutes per week to find these setups? 20, we'll say 20 max. Can you place a market order like right at the market opens at 9:30? I know you can do this, right? This is pretty simple stuff right here. So, you know, I think I should ask, you know, can you see yourself doing this? Because I know you're capable of doing this. Now, the biggest transformation as a trade coach was just making the strategy simple enough so the average or even beginner trader could actually replicate these steps week in and week out, right? I know it's simple, but it works. My students and my family members that repeat these steps, they're all going to retire significantly better than they were before, and I want that for you. Now, I get it, and everybody wants to hit home runs, but if you can't keep your eye on the ball, nothing's getting out of the park, and it's just that simple. So if you can commit 20 minutes per week, right, you can completely change your retirement, and you will very likely make the lives of your family more comfortable as well. So, but you have to put in the work. You have to put in 20 minutes per week, and I know that's not a big ask considering how much probably most of us spend on the market. Okay. Now, the great thing about this reversal bar is you can use it on, all the major indices as well. So check this out. All right, this is the March 2020 sell-off. We all remember it. You know, we had a system that's also moved to cash, so we didn't really trade it a lot. But check this out, man. This is the S&P 500. Look at the reversal bar at the very bottom of a bear market. Enter at the open on Monday. Enter at the open on Monday. huge rally, huge rally. And this is why following rules is so important. I think that the rally of the summer of 2020 is one of the greatest case studies in the last 20 years. Because, just picture this, like we all, and me too, after 2020, we were all just waiting on that second leg down, We all were. Everybody was. And it never happened. And as much as I wanted to think it happened, I had rules that had me in a bunch of tech stocks, and the Nasdaq made its greatest rally since 1999 in the middle of a recession. Just kind of let that sink in for a sec. The Nasdaq in the summer of 2020, after this sell-off, made its greatest rally since the 1999 tech bubble. That's crazy if you think about it. And it was all in the middle of a recession. That's why I trade rules and not news. Okay, so there wasn't a reversal in the S&P 500 in the 2018 bear market, but there was a reversal on the Nasdaq 100, the QQQ. Look at this. All right, you got a reversal bar right at the bottom. You entered the open on Monday. 2019 was a huge year, right? 2020 was actually a pretty good year too, minus the March sell-off, right? It ended up being good. So you had a really good market in 2019. And you had that reversal to kind of tell you, hey, it's time to stick your toe in the water, put some money to work. And if you would have followed those rules, you would have been rewarded handsomely. Now, there wasn't a reversal bar at the bottom in 2009, but there was a reversal bar at the absolute bottom in 2002. So you had this bear market that went from 2000, March of 2000 to the end of 2002, 2003. And it's funny, the Nasdaq was down over 75%. A lot of tech stocks were down over 90%. But look at this. Look at the absolute dead bottom. Look at this reversal pattern right here, weekly reversal right on the Nasdaq. And it took off, and then it kind of lost its footing. But then again, look, right before it caught its footing, right at the bottom of this swing low, you got another reversal pattern. Look at that right there. Boom. That is such a mega rally right there. I mean, it lasted all of 2003 and into 2004. Okay, so again, this is a good pattern and it works. And the pattern is timed the bottom perfectly in all bear markets, except for one over the last 20 years, right? And let's just look, the market, at least before this presentation, it wasn't looking very good, but I just took this snapshot this morning and look at what happened at the bottom in the SPY. This is a few weeks ago. You had a reversal bar. You had a big reversal bar. Now, does that mean it's going to straight go out of here? No, but it could chop around for a little bit and this bottom could hold, right? Or we could have another reversal this week as well. Like, we just don't know. But I know that this was a borderline bear market. I don't know how much this was down from peak to trough, maybe 15% approximately, and you had a nice reversal bar. So I know a lot of people are bearish right now. The sentiment is not great just because you're watching the news, but I challenge you, don't pay attention to any news whatsoever. Pay attention to this pattern because your account will thank you. Your retirement will thank you. So over the last 5 years, we've identified 562 trades that fit this criteria. Okay, so the weekly reversal pattern. Over the 562 trades over a 5-year period, the average win ratio is 71.5% over 562 trades. And keep in mind that there were 2 bear markets in this data pool in March 2020 and fourth quarter of 2018. So it wasn't all roses. So got a 71% win ratio. The average trade lasts about 43 days, and the longer the better, because that means your stock is working. Okay. Now, I don't know where you stand financially, but you could buy 2 per week with an average trade earnings of 2.38%. So if you were to put $10,000 per trade, and you buy 2 per week, that's $476 per week. Now, maybe you can do that, maybe you can't. It really doesn't matter, what you trade or what your account balance is. Maybe it's only $5,000 per trade, or maybe it's only $1,000 per trade. But, if you take enough trades, I mean, this has been the performance right here on a per trade basis. However you work the math, you can do very, very well with this. Okay, and based on what we just saw on the S&P 500 with the reversal pattern, I would not fall asleep on the market. I would not get too bearish on the market. All right, even though I know everything is doom and gloom on the TV. So a lot of people ask, like, do we trade options with this? And the answer is absolutely. Now our options are going to kind of be more quick directional profits because you have the time decay with options. So, you know, we're going to enter the stock, the option, stock in the option. I'll show you how to do this in the members area much quicker, but I recommend booking the option much quicker and letting the stock run so you don't get that time decay, right? Because they don't all run like this. But you book the option quicker, and that way you continue to take money on the table, and then you have that 50% of your money. If the stock wants to run, you still have a piece in the market. I mean, you can hear my passion about rules-based systems, and I love them because they really take the emotions out of trading. Okay, rules-based systems, they're designed to give you more freedom. Like I said, 20 minutes per week, go do something else, go and enjoy time with the grandkids, or go fishing, or go to work, or whatever it is you do. This is not designed to stare at your screen all day. This is a lifestyle trading system, all right, for the ideal lifestyle. The smart money uses them because they work. So approximately 75% of all volume on the New York Stock Exchange is automated trading systems. Why do you think that is? It's because they work, and they're also taking the human error element out of the equation. These automated systems are taking over real life traders because real life traders make mistakes, right? We have emotions. A computer does not. So that's why we put these rules in place to take our emotions out of the equation. Keep drawdowns limited. I am a younger looking guy. I'm not as young as I look, but I consider myself a conservative trader. I, sat through the 2007, 2008 debacle. As Sherry said, I'm not going to do that again, and I don't think you should either. I believe in you should have rules to protect what you've worked so hard for your entire life to build, right? So have money to protect it on the downside and have rules to allow it to grow on the upside. And this is important. Allow trading to be a real money-making business and not a hobby. So what are you looking to get out of trading? Because it's going to be hard for you to follow rules if you're just still looking for excitement. All right, if you're looking for that emotional high every time you hit the buy button, it's going to be very hard for you to stick to rules because you're fulfilling a different need, and that's a hobby, right? If you truly want to be successful, you got to put some rules in place. You got to treat it like a business, just like your local grocery store, your McDonald's, or whatever the case is. They all have business plans, right, to help them navigate different types of challenges, different types of markets, right, so they can really survive and grow. Now, if you like what you saw so far, everything that I showed you, you can more than well take this and run with it. If you want to work with me a little bit closer, I do have an upcoming weekly income system workshop, and that is March the 1st through the 2nd. And I'm going to talk about this here in a second. And again, if you want, I'll open it up to Q&A because I believe I'll have time. But I'm offering a weekly income workshop, and that's March 1st and 2nd. And as you can see, like you can, earn up to $476 per week, depending on where you trade. I don't know your account size, so maybe it's not that much. This is very easy to execute, 20 minutes per week, very simple, 3 trading rules. So let's talk about this workshop. Now, I call it the Fast Track Weekly Income Workshop. So there is additional videos that really help you dial some things in. So I have this 2-day workshop, and the goal of this 2-day workshop is I launched this literally a year ago. I've been doing one a month, and I've gotten phenomenal feedback because, I come across people that, they buy a system or they buy a course, and then they're like, now what? I put together this workshop so I could teach it, so we could have a small class setting, and I can be really hands-on to help you set up the scanners, to sit there and walk through everything, and to sit there until every question is answered. I don't let these classes get above 20. Right, because I want you to be comfortable to ask questions until you're blue in the face. And something I added to this, so they're very small group classes. The next workshop is March 1st through 2nd. The goal is to go from newbie to mastery in 30 days. Even though it's a 2-day workshop, I have homework and things like that you can continue to work on should you choose to do so. But I also have this. If you invest in a workshop, you can attend unlimited for life of this workshop. So let's say that you take a workshop March 1st through the 2nd, and this is a special bonus, by the way, just for this traders exclusive event. But let's say you need a refresher like next month or a few months down the road. You can just send me an email and say, hey, Steve, can I get on the list for the next workshop? And because you've already, invested the money in the first workshop, you can attend as many as you like. That's no problem whatsoever. So I threw this in and people absolutely love it because every now and then we need a refresher. Right? So not only do you get the complete workshop, system program, everything inside your members area, the live hands-on workshop, you're going to get the alerts as well. So for 12 months, I'll give you 12 months of real-time alerts because I want to teach you how to fish. I want you to be able to do this scanning process without me, right? That way, I hate to say this, but if anything ever happens to me, you have a system that you own for life. So I want to make sure that you can do this on your own if you choose, or you can just take the alerts, that's fine. But this way you can take my alerts and follow along with the system. That way it gives you an extra opportunity to get really good at it. So 12 months worth of alerts. Now I keep coming back to okay, so this is the potential, right? If you trade one stock per week, right, it's $238. If you add options to it, that's $70. We're really, really conservative with our options, by the way. And you add the two together, that's $308 per week. Or you could buy 2 stocks per week. That would be $476. You add the options, and that's $554. We've averaged about 4% per month with our options, right? Which, is actually pretty good, about 4% per month for our options alerts. So in addition, you get the custom scan codes. I got the scan codes for stockcharts.com, and I got the scan codes for Thinkorswim. And those are inside the members area. I'll show you how to set that up. Scan code, stockcharts.com. You can, get a free 30-day trial if you'd like, or if you have a Thinkorswim and just kind of follow along during the workshop. And then if you want to cancel it, that's fine. And also have Thinkorswim scan codes as well. So you have scan codes. That way you just wake up Sunday morning and press the run scan button, and you got a list of all the weekly reversal patterns that popped up from the previous week. And then I show you which ones to buy, right? How to narrow down that list a little bit. So you get the scan codes, the workshop, and the alerts. Right, so, and this is just kind of a snapshot of inside stock charts. Again, you don't have to use stock charts. You can take the scan code and build your own on your own platform. But there is an abundance of opportunities. There is an abundance of opportunities. You're never going to be short. It's a very, very rare, maybe once or twice a year, the scanner just runs completely empty, right? You're always going to have opportunities. As a special bonus, I did want to throw in the option alerts, right? So this is the option income alerts. These are my options trader. He's more of a discretionary trader. So these aren't option alerts on the weekly reversals, but this is the system and process that he's averaged 4% per month since he started with me. So I understand people like trading options, so I wanted to throw in that bonus as well. So kind of recap everything you're going to get. I know I'm getting close to the end, so I'll leave 2 minutes for Q&A. So you get the weekly income trading system workshop and the program, right? So you get the live workshop and you can attend unlimited attendances, 12 months worth of alerts. You get the option income alerts, and then you get the scan code. So it's really a huge value. Everything that's included, everything that we talked about, that's $497. And that's just $497 for a one-time. That's not even rebuild. If you want to stay after 12 months, you can just email me. But the weekly income workshop and everything we talked about, the options alerts and everything that's included, you can go to plan.thetradersPlan.com/checkout-weekly income workshop, WIW, right there. So again, that's plan, HTTPS, that's a secure order form, plan.thetradersPlan.com/checkout-WIW, weekly income workshop, okay?
I put it in the chat too.
Oh, okay, perfect. So you can click on chat. Now I understand there's a lot of uncertainty out there, right? A lot of news. So here's my guarantee. So trade it for 30 days. And if it's not for you, just send me an email and request a full refund, right? You got to approve at least taking one trade. So you have to at least put forth some effort. But I understand most people don't want their money back, right? They want a mentor. So here's my second part guarantee. If you haven't, made $3,000 or tripled your subscription investment in 90 days, I will personally mentor you one-on-one until you do. We'll look at your trade log. We'll see what's going on. We'll see if you're following the trades correctly. And that way I can help you overcome and really have 2022 be your breakout year. So there it is. There's the order form right there. The workshop, the alerts, the option income alerts that have done really, really well. And then you got the scan codes. Everything's included for a one-time payment of $497. And that's it. I can open it up for Q&A if anybody's got any questions.
I think we do have some questions for you.
Where do I don't see those. Where are they?
All right, just a second. So now you should be able to see them under questions.
Okay, I see them now.
And usually what I will do is I will sort them on the received column. I'll sort them so the most recent one is at the top.
Okay, so what's
So like Russell's asking you, what are your rules for options?
yeah, so I actually have two rules. To keep it simple, I do 70% target, 50% stop loss. I usually do about a 60-day call. One strike out the money.
Cool.
Please put the slide for archive. I'm not sure what that means. Does this strategy work?
Oh, he wants to take a screenshot of your archive slide.
Which one is the archive?
Which one, Ray? You can watch this again, and then you could email Stephen for the actual slides that you need.
So
we also had a. Go ahead.
Well, I'm gonna type in my email address. It's Stephen at thetradersplan.com. Yeah, tradersplan.com. I'm gonna send this to everybody. That way, in case anybody has any questions. Does this strategy work for ETFs? Yes, I have scan codes for ETF actually. So that's inside the members area. You get access to that. So 100%. Can we use a strategy to short trades too? Honestly, I don't recommend it because it'll work in a prolonged bear market, but most pullbacks and corrections, they don't last very long. The 2008 type of markets are actually pretty rare. So I think over a reasonable number of trades, I think shorting it, you're going to lose money. What are the rules for options? I went over that. Put up a slide accessing archived webinars.
So that was for me actually. So you can I took care of that.
Okay. So that's
it's for how they can find this another day. So we've archived webinars. So go ahead.
Okay, I got you. I think that's it. So again, you can contact me directly at Steven, STEVEN at thetradersplan.com. If you have any questions, I'm happy to answer them.
Awesome. And I put that in the chat. Guys, I put it in the chat where you can just click on the link to his offer. That's a pretty fantastic offer. I'm always so pleased at the great value we have on the Traders Exclusive Live series. So, Stephen, thanks for being here with us. I appreciate it. It was good to have you back again.
Absolutely. Thank you so much. I look forward to working with everybody, and I'll respond to questions pretty quickly for the emails.
Awesome. Okay, great. Thank you.
All right. Thank you.
All right. You have a good day. All right. That was Stephen Quetzal of the Traders Plan. You need to go into the chat to access his link and his email. I want to introduce to you now. Now you're going to have to fix this. Is it Miloni Kamdar of Real Life Trading India with Buy the Dip with Fibs? Miloni is a Real Life Trading India coach who is extremely knowledgeable in her principles and concepts of trading. She specializes in growing a small account with her Fibonacci analysis and hedging with options. She's extremely passionate about trading and has the genuine excitement to help others. With her grace and patience, she will transform your trading journey, whether it's her 6 weeks mentoring program, one-on-one coaching, day trading rooms, or Slack channel. And if you're looking to start your trading journey from the very beginning, or you're a struggling trader, she can help you with multiple dimensions. So welcome, welcome, Miloni. Am I saying your name right? Miloni?
Yes, you're saying it right. My name's Miloni. Yep, you got it right.
Hi. Okay, I'm going to make you the presenter. Now, do you like to see the questions on the fly and ask people questions? Do you like it to hold it until the end?
No, I would love to see questions as we go, so I can kind of
All right.
keep up with them and explain.
All right. So now I've made it so that you're also an
Okay.
organizer, that you can see the questions as they come in.
Awesome. Okay, so that would be in the chat, right?
Yes, and there's a chat box that you
Oh,
can
and then
send
the
to
questions.
everyone, but there's
Yeah.
also a questions box, and that's usually where that's where everything comes in from everyone listening. And I can see your
Awesome.
screen. This is great.
Yay. Okay, perfect. So I'm sorry, I didn't mean to interrupt, Sherry. Go ahead.
No, you didn't interrupt me. Take it away. Have a good show. I'm
Thank
glad
you
you could
so
make
much.
it.
Thank you, thank you. Well, my name's Miloni Kamdar. I am a coach with reallifetrading.com, and I am the head of Real Life Trading India. If you have heard of Real Life Trading Institution, it's a wonderful, wonderful place for new traders, experienced traders, advanced traders to kind of come in, get together. We've got a huge, wonderful community where everybody just kind of helps everybody take better trades and take winning trades, develop discipline, develop rules, things of that sort. So I have just recently branched out to the Indian side. However, I also do a lot of work on the American side. So let's get started. I actually, unlike the previous presenter, enjoy a lot of intraday reversals. I am a true day trader. I enjoy day trading a lot more than swing trading. Not to say I don't swing trade. I do, of course, but my daily income relies on mostly day trades. And I like to spot afternoon reversals right around noon time or between the 11 to 1 time slot is where I will be looking for perfect trade setups with Fibonacci. The way I like to start my day off is, so I found a couple of examples of a couple of good tickers that we typically look at in day trading, and they're moving pretty quickly and swiftly. So this is Tesla, and I wanted to show you guys what I like to do to begin my day. So right at the beginning, we know, so this is the candle we were trading on. We're anticipating this candle. So if you can, please ignore that candle just right now. What I like to do is look at this on the daily chart and say, okay, where is Tesla? Is it at a crucial level of support? Is it at a crucial level of resistance? Tesla on this daily chart right now just kind of looks a little bit jumbled up. We can't really see much going on in here. We do see that there is a crucial level of support somewhere in this zone, but we're kind of far away from that with this candle right now, currently. So now what I want to do is notice the fact that we're also below the 10 EMA. So I primarily want to look for bear trades around noontime, or if we could have potential reversals around noontime, and base my targets and stops on Fibonacci levels off the previous day's candle. So if the previous day's candle has a significant move like this one, this was a pretty bearish candle that day. So I like to put fibs on this and kind of anticipate how low we can go. So if I'm specifically looking for reversals in the noon towards the bear side, I want to see how low we can go. So with that being said, let's go over to the 15-minute chart now. And the 15-minute chart, I think in my opinion, or we like to trade that a lot more than any other time frame. I think it's a much more precise chart than the 5-minute or the 1-minute. Even though I have all of those time frames, I just look at them for reference, not necessarily use them. So if I go back, this is the day that the fib levels are placed on. If I go back and look at this in reference to today's candles, we've had this bull run. We haven't broke out of yesterday's range. So we haven't gotten out of this range of this guy and this guy. Pre-market, surely maybe a little bit of dip, but at open, we got bought up, and now I am looking for reversals around between the time frame of 11 to 1 o'clock. So now, with that being said, I know that my bear moves could work. What I want to spot, what I want to look for specifically is inside candles. So I have an indicator on TradingView. It's fairly simple. If you just go to indicators and type inside candles, you can find a whole bunch of them. And mine is a simple inside candle indicator. So I want to spot these inside candles. I see there's one that's come up over here, and that could be a pretty good reversal candle as well. I want to give it a little bit more time and see, it looks like we're trying to make a little bit more of a high. So I want to make sure that we give it a little bit more time and close below the 10 EMA. The minute we get a close below the 10 EMA on the 15-minute chart, that's when I know a true reversal has set in. So I am going to look for inside candles constantly around the top and the 10 below the 10 EMA. Now here comes the 1 o'clock 1:15 candle. This is an inside candle, and what I'm going to do is place an entry somewhere below, roughly below this candle, somewhere over here, a bearish entry, and a stop at probably the previous high pivot, the previous pivot, most likely. On Tesla, that seems to be working out fairly well, rather than putting a stop on the inside candle. As you can see, you can get wicked out pretty quickly if you're in a bearish trade. Now, these bear trades have worked out phenomenally well lately in our bear market, in our bearish environment in general. But these could also work in the opposite direction. So if we've had a sell-off and we're trying to look for a reversal, then I would also spot an inside candle somewhere down here and look to go long on it. So anyway, moving on. So we put our entry over here, our stop above the previous pivot. Our risk to reward is fairly low on this guy. What I like to do usually is to place my targets 1 fib level and 2 fib levels. So 2 fib levels down, which is the 618 retracement right over here. And as you can see, this would have been a fairly easy, profitable trade. Simple as that. Spot an afternoon inside candle in either direction, bullish or bearish, and you can take the breakout of that in any direction from there on. Now, this can work on any time frame. So for example, if you're looking to buy the dip, if you're saying, hey, we've had this massive bull run on Apple, and wave count wise, we've kind of had a reversal. We're trying to kind of pull back a little bit more now, and you're trying to find a spot to get in for the what we usually call buy the dip zone. What I like to do is place fibs, use the Fibonacci tool right here on TradingView, place fibs right from the low to the high off the bull run, and see genuinely how far we can pull back. 618 to the 50% region usually is the dip Bible region. 618 usually happens to be the golden ratio region, and that's where most people are looking to buy. So now if I'm looking to invest in Apple for a swing trade, maybe lasting for about 2 to 3 weeks, I'm going to place an entry at the 618 region and an exit 2 fib levels higher, so 1 and 2. And as you can see, it coincides with the 10 EMA right over here from the bottom, and it would have worked really well. We could have gotten out, you know, you could choose to trail your stops, you could remain on the trade and maybe take half off here and half off the rest of your position over here. In hindsight, it all looks easy when you're buying at the 618 level. It always looks a little bit scary, especially with these 2 red candles. But believe me, guys, the 618 ratio works fairly well when you're trying to buy the dip. I want to show you something really cool in the opposite direction as well. So if we were to pull up the S&P 500 currently, and on the daily chart, say, hey, we've had this bear run, and now I want to see how high we can go before we make another move down, before we make another leg down. So if I were to do that, let's do our fibs on this guy. There we go. This is our 618 level. I know it seems really scary shorting up here, and it doesn't seem like we're going to make another wave down. But if you were the guy predicting, and not predicting, but if you were technically trading this and you wanted to find a swing trade, this level happens to be a good level of resistance. On the other hand, now if I want to go bullish, and if I think, okay, well, we've had our leg down, and now the market conditions are changing, and we might actually see a reversal, and you're anticipating a bull move up, I would not look to enter this trade until we take out this guy right over here, which also makes sense resistance-wise. So that's just, so it works in both directions on any time frame. This is a day trade that my team and I today took on NVIDIA. So NVIDIA today opened right over here at 9:30, immediate flush down, which I'm not doubtful of because we had a pretty big buying day yesterday. Today is the earnings day. I believe earnings come out tomorrow in the morning. So there would be a lot of anticipation in that range. So anyway, so we had this dip and then we had this buyback. We made a new high, and now I'm looking for a reversal down. So what do? Look for a reversal candle right around noon to 1 time frame. I mean 11 to 1 time frame, and this fits in that criteria. We did close below the 10 EMA, so that kind of fulfills it. So we put our entry at below the 236 level right over here, our stop right over here, and our target will be 2 fib levels down. And so our team came out profitable today. This was our winning trade for today on NVIDIA. And as you can see, it works really quickly, fairly easily, and there's not much more signs to it than this. I'm gonna pull up the panel and see if anybody has any questions. Sammy says, is this an old chart? So on NVIDIA, no, this is today's chart. But then on Tesla, it is a previous chart, yes. So this is January 20th, if you wanted to go back trade it. Today just happened to be a turbulent day in a lot of different places. So it was hard to find that one specific, we took our trade on NVIDIA and it worked out quite well for us. So I didn't really see that many things setting up with this strategy. So I had to kind of go back and find you guys a couple of good examples of where to trade. Okay, I hope that answers your question, Sammy. Okay, this is AMD. AMD is another one of our darlings that works really, really well with our 15-minute inside candle compared to Fibs kind of strategy. So this is AMD, and my Fibs are actually placed not on the previous day's candle, on today's candle, on that day's candle. And I'll tell you why. So let's go back, look at it on the daily chart really quickly. Okay, cool. So we've looked at it on the daily chart, and AMD looks like it's starting a reversal with this morning star reversal process right now with this candlestick pattern. Okay, cool. We do not like to trade, at least my team and I, we don't like to trade early in the morning, right around the 9:30 chaos. We want to kind of sit there and assess and see what plays on and what comes along our way. But if you were to do that, if you were to play the morning pattern, great, you could do that. Put Fibs on the previous day's candle, use this inside candle and use that as a reversal. Great. We did not take that trade on that specific day. We didn't take this trade at all on that specific day, but as you can see, it could have worked. We actually took this one on this inside candle, and because AMD had taken out the previous day's range, so we had taken out this candle's range, and by noon it had come to its average true range. So every stock typically moves, it has a character. So Tesla on an average moves about $13 to $14. AMD typically moves about $2.5 to $3.5. In these volatile days, things might change. Just recently, AMD had a 10% drop, but that's an unusual candle. So we know that by noon, we have had its average true range come into AMD. Okay, great. So now we put Fibs on today's range, on today's candle, since we've had an outer range from previous day. So we put Fibs on today's range, and we look for an inside candle. This happens to be right about 12:45 range. I know that AMD is looking to make a new high, but it's made a new low. So now I know that AMD has to do this move for it to go higher, and it did not. With this inside candle breaking down towards the downside, what we did is place an entry over here and our stop over here. Took this trade to the bearish side, since AMD clearly was doing this move lower. So now, with that being said, we placed our entry below this candle, fairly close to this 50% retracement level, and took our profits 1 and 2 fib levels down, so right over here. And the same thing could have worked with this candle to take that bear trade. This is a true intraday reversal strategy that I love trading. And I couldn't, it was hard to find any recent examples of any bull trades working out in that environment, since we haven't really had very many bullish days. And if we do, then the buying kind of sells off really, really fairly quickly. So with that being said, lately the bear strategy has been working out really well, but it works equally the same exact way with bull trades as well. So if AMD had a drop and we saw a 15-minute reversal candle somewhere over here, then we could place an entry above the inside candle and then take our profits 2 fib levels up. So anybody have any questions on this so far? So somebody here says, can you please describe inside candles? Yes, absolutely. Okay, so an inside candle, basically, so when something has had a massive run up, I want you to think of inside candles really as just, imagine you just broke out into a sprint, 100-meter sprint, and you're kind of like, hey dude, I need to take a breathe. I need to take a breather. I can't run anymore. I just need to chill out for a minute. That's what an inside candle is. It's just consolidation. Inside candle, what it means really in true definition is that, oh, sorry about that, guys. Let me go back to the pointer. Okay. In its true definition, what it means is that this previous candle covers the entire body of this one, which means this new candle, this inside candle, the one that we're calling it an inside candle, has not made a new high or a low compared to the previous candle. So yes, selling came in, but we didn't sell as much as buying came in on the previous candle. So that's what it essentially means. Same exact thing on this guy. This is an inside candle, and what it means really is just AMD did this run up and it said, I just need to take a breather. I need to decide which direction we're going in, whether we're getting more buying or selling. And this candle did not make a new high or a low in reference to the previous candle, which is this one. Inside candles, guys, work really well on the daily chart as well. So if you're trying to decide to take a trade, I'm going to try to find an inside candle and show you guys what I mean. If you're trying to decide, so this is a good inside candle, and you're saying, hey, I want to short below this candle. In this case, wouldn't have worked out really well. But if you're a new trader and you're saying, I don't understand chart patterns, I don't understand technical analysis right now, what I'm going to do is just find inside candles. There's lots of inside candles on Tesla usually. I'm having a hard time finding inside candles. Okay, cool. Here, there's one on AMD that I just found that's pretty cool. Awesome. Okay, here. So AMD had a pullback. To me, this looks kind of like a bull flag, and we're kind of looking to break out of it. To somebody coming in as a brand new trader may not know what a bull flag is. So let's say we spotted an inside candle right over here, and this was the day we wanted to get into trading. Okay, cool. What we're gonna do is place an entry over here and a stop below the previous pivot. And that would have given you a pretty good risk to reward to go long on AMD. Now, I know this looks really scary to be buying the dip, to be getting in over here and then the immediate flush down comes in. That's why we want to place our stop right over here below the previous pivot, so we at least give it a little bit more time to bounce a little bit more. And if you had your entry over here on AMD, you would have been a happy camper by now, at least. So that's one way to trade inside candles. If you're using it just for day trading, here's another great inside candle, indecision candle, inside candle, and you buy above the inside candle. If it's meant to be a day trade, you can put fibs on this guy and look to exit at the 1618 level. Okay, so on this inside candle, if we're trying to see how high it can go, it clearly took out yesterday's high, and we're trying to see how high it can go, you can probably put your target at 1618 level, and kind of assess from there, see if you want to still remain in the trade or exit from there, if it's meant to be a day trade. But that's what an inside candle is. I hope I answered your question correctly. Type in a 1 if I did. If not, if you're still confused, we can still kind of talk about it a little bit more. This is a beautiful inside candle as well. If it's meant to be a day trade, you can certainly buy at the top of this candle and look to exit at the 1618 level. I want to show you something really cool with Shopify, guys. Everybody knows the horror that Shopify has been put through today. So let's go look at the daily chart on Shopify. And let's take the fibs off of here. This was also a trade that my team and I took today in the morning, and we were quite profitable on it. So, okay, cool. So this was the previous day's candle on Shopify, and we're trying to determine how low things can go. Here we go. Okay. Well, Shopify opened below the 1618 retracement. So now our next target should be the 2618, which is what my team and I exited at. We kind of entered over here and our stop was somewhere above, and we kind of waited till the 2618 level. In hindsight, I feel like we left so much more on the table, but we made our day trading money and we're out of it. So this is Shopify's candle. And if one was saying, okay, well, we've had quite a bit of selling, absolutely. Where could be our next level of a bouncing spot? Just some sort of a relief, just to kind of adjust the RSI a little bit, and seeing if we can bounce. I'm not saying Shopify is going to go to the moon anytime soon. It's clearly bearish. It broke below all of the support, but it's taken quite a bit of beating down. So the 3618 level right over here seems like the spot it can definitely bounce off of. We've had a lot of news related stuff going on today, and so if for whatever reason we do pull back to this range, I would put a buy entry just based on fibs and maybe hold it till the 2618 level and see if that works out. Again, this may not turn out to be a day trade, but this kind of tells me that it's at least at a good level of support. This is unusual, guys. Stocks don't usually pull back to the 3618 level all day, every day. Lately, we've been seeing a lot more of this with Netflix and Facebook and all of the earnings stuff happening, but this is fairly unusual, and this is quite a bit of a sell-off. So I would feel confident kind of seeing if we can get a reversal on a 3-minute chart somewhere over here, and maybe looking to buy the dip just a tiny little bit and seeing if it can turn into a day trade or a swing trade to this level. Anybody have any questions on it? Okay, I can only see like the most recent ones. I don't know if there's anybody else asking questions, but okay, cool. All right, so I answered your question well. Perfect, right. So let's go back and look at the Qs real quick. Qs earlier, like we talked about, just like the SPY, are doing something very similar. If we were to, let's say this is the most recent run up on the Qs. If we were to say how low things are going to go realistically, if we want to put realistic targets, and if things truly start to dip, this would be a good fair assessment. If we want to see, so this was the most recent bear run on it. And if we wanted to see when do things truly start to reverse, well, I put the fibs the other way around, guys, but if I did it, let's do it the right way so I can explain to you what I mean. Okay, if we wanted to see realistically where the next level of resistance would be over here, and if we wanted to kind of buy the dip, I would not be a buyer until we took out at least these previous levels of resistance, which makes total sense. If we flip this around and say, okay, well, this bear run is still going on, how low can things go? Then I would flip the fibs around. Let's flip it around and see what happens over here. And say, okay, realistically, things could truly pull back to this level. Now, I know it seems comical when I say that, because I myself find it really hard to believe that we would wipe out all of this run up, but it is absolutely doable. if you have any doubts about how far things can go, I highly urge you to go back trade MU chart during the 2008 and 2009 downfall. It really will surprise you. Sometimes you look at a chart and you say, who would have thought Shopify would be at 725, or even here, maybe a couple of months ago. So I know sometimes, and I'm not saying, oh, things are going to go crashing down and collapsing in no time, but sometimes things seem kind of hard to believe, but they could realistically, if you wanted to look at a realistic target, those could be good realistic targets. Anybody have any questions on anything else so far? As far as that is concerned, guys, this was my presentation, and this is just how I plan on how I day trade, how I like to find setups, how I like to use Fibs to get good setups, good profitable setups that move your way. Of course, this comes with a little bit more of pattern recognition and chart analysis and just a daily, sentiment and price action movement also. But Fibs helped me a whole bunch placing realistic targets and stops. If anyone wants to come check out our website, I have it pulled up right over here. We offer a live where we trade together and everybody has an input for the futures market. From 8 a.m. to 9 a.m. we have mentorships and one-on-one that we can go over. A couple of different strategies. I can help you develop a trading plan if you need to. Or if you were interested in our beginners or advanced mentorship groups, there are also options right over here. We also have a really fun Slack channel, which you can join for $10 a month. And that's where we do all of our live trading. And if you're not in one of our live rooms, then that's where you would have access to all of the trades that I take and our team takes. And everybody can contribute in there and kind of give in their inputs. Yeah, that's about it. If anybody has any questions, I would love to answer before I sign off. If not, Sheree, I'm all yours. You can take over from here.
All right, let's see. I have one that says, can you show us on how to draw fib on NVDA and SHOP starting and ending? And
Sure.
can we get your email address?
Yes, absolutely. So I'm going to type in my email address right over here. It's my first name, Miloni, at reallifetrading.com. Okay, that's my email address right there. Okay, and you wanted to see how to draw fibs on NVIDIA and Shop. Okay, cool. All right, so on NVIDIA, we have had a massive green candle. So ideally, I'm looking for a pullback. I'm looking for maybe a pullback to the 10 EMA or a reversal. So what I do is, let's get rid of this completely. I go right over here on TradingView, and in this thing right over here with the fib retracements, this is a tool that I use, and I will put the fibs on the high. Oops, sorry guys. From the low to the high. And now you may ask, why not the other way around? Because I want to see essentially how low things can pull back. So I want the 1618 retracement level to be on the bottom. So that's why I put the fibs this way. Doesn't have to be this way if you're trying to look for how high it can go. So NVIDIA also, guys, is setting up for a beautiful inside candle. If we can close like this, and tomorrow's earnings, so I'm not too keen on calling anything on this, but anyway, so this is the way that I do my fibs, and then we go to the 15-minute chart, And the fibs are always drawn on the previous day's candle, so I can refer to how things are looking compared to the previous day. That's why I draw my fibs accordingly. Now, if I'm looking at this chart, now it's clearly looking bullish. It made a new high on the 15-minute chart. If it takes out this high, then it would pertain to extreme bullishness. Will I be entering a trade there? No. It's made its move. I'm not interested. Also, it's pretty late in the day, so I'm not really truly interested in that. But this is how I like to draw my fibs on that. Now on NVIDIA, as you can see, this was the reversal candle that we traded. This was the inside candle that we traded, bearish, of course. So it is at the 236 level, and we put our entry over here, our stop over here, and our target's 2 fib levels down. So right over here. Yep. And then on Shopify, I just put my entry. So on Shopify, there's the previous day's candle right over here. And we're trying to see, so I put my fibs on the high and the low of yesterday's candle. And that's how one can come up with the 3618 level or the 1618 level. But we opened below the 1618 level. So the next stop for shop was to go to 2618. Let's go see if it had any kind of bouncing right around that area when it was dropping pretty miserably. Not really. Took a little breather, but didn't really bounce off at all over there. But anyway, Shopify was, if you're asking about why I decided to trade it today, we put our entry below the pre-market low. So right over here. And just by looking at the daily chart, it had nothing to do with fibs majority wise, but just by looking at the previous day's chart, I mean, it had all of these buyers that were hopeful for earnings, and it's got lots of bag holders as well from, you know, a couple of days. This candle was just brutal to be taken out today, and we kind of opened right below it. So I knew there was more bearishness in it, and that's the way I put fibs. But now you can kind of assess for yourself and see if we will truly bounce off of the 3618 level, which to me it looks like we're kind of trying. I don't know. We'll just have to see if shop takes its course today. But yeah, that's the way I did my fibs on Shopify and NVIDIA. If anybody has any questions, guys, please feel free to email me, reach out to us on social media. It's all out there on our website. And I also oftentimes put trading setups on our YouTube channel as well. And you can find all of that on our website as well. Yeah, absolutely. Thank you, Sheree. Thank you for this opportunity.
Thank you.
Yeah.
I appreciate you coming on. Are you actually in India?
No, I live here,
good.
but I'm setting up a team of traders in India currently.
Well, I just was worried about how late it was where you are, because they're about, you know, a lot of hours ahead of us, and from where I am anyway on Eastern time. So
yes,
all right.
I'm Indian, but I live here in Charlotte, North Carolina. I'm trying to set up a team in India. Yeah.
Awesome. Well, I was just thinking, you don't have to be in person in any place anymore. We can do everything online. So thank you so much for being with us. I hope you'll come back again.
Absolutely. Loved it. Loved presenting. We use the 10 EMA strategies a lot. We have a lot of different trading strategies, and I kind of like to think of trading as baking a cake, you know, and if you've got all the right ingredients, if you know what you're doing with all your right ingredients, you're going to have a perfect recipe every single time. So my job is to kind of get you familiar with what all the ingredients typically do. And once you get the hang of it, then, you know, the sky's the limit for you and your trading journey. So, yeah.
Perfect. All right, folks. Now she's posted her, did we have a link? I think I did post a link. Yep. reallifetrading.in, and then Miloni at reallifetrading.com. Her email is in the chat there, so take advantage of that. Know that you're going to get email from her, so be on the watch for that. And thank you so much for your time. I appreciate you presenting for us.
Thank you, Cherie. Thank you so much.
Have a good day.
Thanks.
All right, that was Miloni Kamdar, and you can definitely get in touch with her, and I hope you will. Now, our next speaker is Wally Olopade. He's going to talk, he's from Right Side Trading. He's going to talk to us about how to pick stocks that are in season and learning the clear signals, you know, when the seasonal pattern is actually beginning its move again, and several other items there that are just going to be totally packed. So let's see. I've got Wally. Are you there?
Yes, I am. How you doing?
I see that you are. How are you doing?
Good, good, good.
I need to make you the presenter.
All right.
And do you like to take your questions on the fly, or do you like them held until the end?
Yeah, I actually like to take the questions on the fly. It's always good
All
to
right.
have interactions.
All right, we'll do that. You should have the questions box now that you can be able to see that.
Okay, so
Now let me just,
see now.
I can see it. Okay,
Okay.
folks, I just wanted to say that Wally is with Right Side Trading, how to pick stocks that are in season. Wally's an expert stock market analyst. He's been featured on Yahoo Finance, Benzinga, Traders Talk Live, and many more media outlets. Wally has consistently timed many of the market tops and bottoms and has used this to bounce back from the 2008 financial crisis. And Wally founded Right Side Trading in 2013. He's been teaching individuals how to generate income and build long-term wealth through trading and investing safely. He teaches how to view each stock as a customer and how to build a list of customers that can help you grow your portfolio. Thank you for joining us, and take it away.
All right. Well, good evening, good afternoon, good morning, wherever you're listening in from. Thank you so much for being on this call. Thank you so much, guys, for having me to speak and present on what I do. I do hope that what I share with you today would shed some light on how you can, another way to just approach the market. We've had some wonderful speakers earlier that have shown different strategies. And that's all it really is. It's just really trying to understand a strategy that you feel comfortable with and just going with that. But like the introduction says, I've been trading since 2013. Actually, 2012 is when I first started trading. Lost a lot of money back then. This was prior to everybody teaching stock market on the internet. And long story short, I had to sit down and just really do some data analysis. I'm an accountant by profession. Well, actually, I went to college for accounting. I worked for a merger and acquisitions company doing financial analysis. I took what I knew from that, brought it into the stock market, and changed the way I see the stock market from now on. Okay. So today, what I wanted to share with you is something that has to do with seasonal patterns in the market. And we all know this seasonal pattern, which is earnings. Earnings season comes, we are smack in the middle of earnings. I just heard the last speaker talk about Shopify. And, I just kind of giggled because, again, this happens all the time. And so what I'm going to share with you guys is how we approach earnings seasons, because, again, it happens every quarter. So we know this is going to happen 4 times a year. And my goal and hope is that I will shed some light on how you can approach earnings season. Maybe you're doing it the way I'm doing it, maybe you're not, but if you're not, then hopefully this will help you. And the reason why I say that is because I used to be so frightened, so scared of earnings seasons. The uncertainty in earnings season really, really used to bug me. And I found a way to overcome all that. And I hope that that would help you too as well. All right. Okay, so before I do that, very quick disclosure, I'm not a licensed financial advisor, please understand that. I'm just simply a guy who took the time to study some stuff in the market, applied it, and I'm now sharing what worked for me, okay? And I'll also share the things that did not work for me as well. My agenda today is why earnings seasons. And then we're going to talk about good earnings versus bad earnings results. Now, if you don't know anything about earnings season, there's a lot of information out there. So I'll just touch on it briefly because of time's sake, because I want to show you some of the examples. But at least let's just talk a little bit about earnings. Some of these are just recap of what you already know, and then we'll get into the meat of today's lesson. But again, we're talking about why earnings seasons, good earnings and bad earning results. So everybody that knows earnings knows that there are three phases. And if you didn't know, at least it's very obvious to tell that there are three phases to earnings season. Now, we are defining this based on my research, my approach to the market, okay? So I don't want you guys going out here and typing in pre-earnings on Google and say, what's the official definition? To be honest, I don't know what the official definition is. But what I'm showing you here is how I see pre-earnings, earnings day, and post-earnings. Now, the first thing is pre-earnings, and the way I define pre-earnings is any stock that has earnings within the next month. So for the next 30 days, any stock starting today, so today is February 16th. Between now and let's just assume March 16th, because there's only 28 days in February, but let's just assume 30 days is March 16th. So between now and March 16th, those stocks, any stock that has earnings will fall into what I consider to be pre-earnings. Does that make sense? Then all the stocks that have earnings day, Shopify is a great example. Today was earnings day. I mean, the results came out. We now know what happened. And then we have post earnings. And these are any stock that has now officially announced its earnings, okay, up until the next 2 months. So starting from yesterday, any stock that announced its earnings yesterday are now in what we consider to be post earnings. And so yesterday was the 15th, so we'll go the February 15th to April 15th will be what we'll be looking at for any stock that announced its earnings yesterday, okay? So we'll be looking at that and saying those are post earnings. And so up until 2 months after earnings, any stock that has earnings, so that means that we can go back to January 15 and say, oh, any stock that announced earnings on January 15, guess what? They are in their post-earning phase as of now. And quite frankly, we could even go all the way back to December. So I would say December 16, any stock that announced earnings after December 16 is in what we consider to be the post-earning phase. Does that make sense? And so that's the three phases of earnings, okay? Now, I would like to, and if you don't mind, I would truly be appreciative if you can engage me, if you choose to, and if you can, out of those three. All right, we just talked about pre-earnings, earnings day, and post-earnings. Which one do you believe is the most profitable out of the three? Anybody? Which one do you believe is the most profitable out of the three? So thank you, Russell. I see some people say pre-earnings is one. Others are saying, well, another pre-earning KP. I wonder if that's a KP that I know as well, right? So right now, pre-earnings is winning, okay? What about the most manageable, okay? Which one is the most manageable out of the three? Pre-earnings, earnings day, or post-earnings? Which one is the most manageable? Very good. Post-earnings is what I'm seeing here. Excellent, okay? And last but not least, which one is the most risky out of the three? Anybody? It'd be interesting to see what people have to say here. And if you don't know the answer, honestly, it's fair. Just say, okay, I don't know, you know. Which one is the most risky out of the three? Okay. And again, wow, very interesting. I am seeing pre-earnings. Wow, very, very interesting. Very interesting. Okay, well, thank you. I appreciate your participation, guys. Thank you so much. Okay, so for me, the most profitable, and I'm going to show you this, the most profitable to me is actually post earnings. Okay, the most profitable is post earnings. The most manageable is post earnings. Okay, the most manageable is post earnings, the most profitable is post earnings. I'm going to show you this. And then the most risky of them all to me is earnings day itself. And again, it depends on how you play the earnings day, right? So what I mean by the earnings day itself is, let's say they're going to report their earnings tonight. And so you're jumping in tonight, wondering what's going to happen tomorrow. You don't know whether it's going to gap up or gap down tomorrow. That's what I consider earnings day. Now, if the results is already out, and then now you're jumping in, that's post earnings. Does that make sense? So anybody jumping into Spotify today is really dealing with a post earnings trade. Does that make sense? Okay, that's what you meant by pre-earnings. Okay, no worries, no worries. I got you. Okay, very good. So the idea here is that I was the guy who used to try to jump in the night before earnings because I heard so many people talk about how much money they made back then. This was back in 2012, 2013, 2014. How much money they made by buying some call options the day before earnings. You hear the results come out, the stock will gap up so much they'll make a boatload of money, right? And then as soon as Wally decided to go do it, nope, it didn't work. Can anybody relate to that? Because these are like true experiences I had to go through. So, yes, sir. So, yes, so I went through that and it got to a point where I was just like, man, this is not working. I might get lucky with one, but I would have 10, 15, 20 of them that just does not work for me. Okay. Or even if they move, they're not moving enough. And then the volatility crush, because I was trading options back then, would just crush everything out of it. And I was like, man, I just felt like it was manipulated. I felt like, they people were watching me. I used to have multiple accounts because I would analyze it on one account and then place half a trade on one account and place half the trade on the other account because I just truly believed that they were watching me, right? And even with all that, still didn't work out. And so I had to take the time out and say, I don't like this. This is just ludicrous. This is not realistic. Doing the same thing over and over and over is just insanity. So I said, wow, what could I do better? Okay. So what do we see here? This is the example of what I mean by pre-earnings. So this is what I mean by pre-earnings. So we'll see this right here take place, okay? And then prior to earnings, and this is something that most people might not be aware of. So if you don't know this, write this down. If you do, that's great. It's just maybe confirmation from somebody who's been doing this too as well. What I realize is that there are certain stocks, not all stocks, but there are certain stocks. Apple is one of them. Microsoft is one of them. American Express is one of those kind of stocks. There are certain stocks where 30 days, write this down, 30 days before earnings, 30 days before earnings, they start rallying in price. Ladies and gentlemen, if you understand this concept, when I started realizing this, I said, wait a second, why am I forcing myself to trade earnings day itself, the day before? And so what I just did was I shifted my paradigm and shifted my focus to saying, okay, what if I planned a little bit better, identify certain stocks that would do well prior to earnings, and focus on those stocks 30 days before earnings, right? The interesting thing was because on earnings day, those stocks that gaps up big and the ones that drop big, like Shopify today, they're the ones that grabs the headlines attention, right? And so because at the time I was paying more attention to what the media was saying, I was only focusing on what they were presenting to us, not realizing that there were other stocks that I could be paying attention to that had nothing to do with what the media was interested in at the time. So again, this is pre-earnings, and I'll show you examples of this where you'll find stocks 30 days. And now it doesn't happen exactly in 30 days, but we start looking 30 days prior to the earnings of certain stocks. We start watching for signs that these stocks are ready to go higher. And when we see those signs, we jump in, we make good money, okay? This is earnings day itself. This is an example of earnings day. So here's a stock that had the night before. This is what I'm talking about. So this would have been me back then on this day, anticipating the gap up in price. And if I was right and everything worked out, wow, what a good return on my money I would have had on that day. Okay. I would have been super excited. Excellent. However, if I was wrong, I lost a lot of money. Okay. And I just didn't want to gamble anymore. What's the difference between earnings day and post earnings? This is the same stock. I want you guys to see this. This is that earnings gap. But then everything after earnings, I want you guys to see this. This is what I mean. All right. This is what I mean by the post earnings rally. Okay. So Russell is asking the question, if we lose 19 out of 20 times buying calls the day before, would it make sense to buy puts instead? Sounds silly, but makes kind of sense, right? You're welcome. Believe it or not, I tried that too. I kid you not. True story. Okay. I tried that too. And I was like, you know what? Why don't I just do the opposite? Because if it's been going the other way one way, and I think it's going to go up, it doesn't, let me try the other way around. And I kid you not, Russell, every time I did that, see, part of that is the volatility crush that happens again with these call options. And so that just really hurt me, regardless of what direction the market went. All right. And again, if you understand options, you know some of these are super inflated in pricing. It's just all kinds of stuff that I don't want to get into, but it did not work for me by choosing the other direction. Okay. And so it's just one of those things like you would think. And that's why I really believe they were watching me. I said, man, they watching me. Right. But I was paranoid back in those days. And so, but nevertheless, so when I started sitting back and I said, well, let me see if I can analyze this and what can I do better? I want you guys, this is the epiphany for me. And this is the crux of what I'm going to show you here. The epiphany for me was I went back and I started studying some of these stocks, like, oh, the ones that gapped up, what could I have done? And I said, man, I noticed that if I bought here, let's say I bought at closing here, which is what I used to do, and then it gapped up to the open because I would sell the very next morning. That was my game plan, right? If I bought here and then I sold here, I want you guys to see this. This is the distance here. This is how much money made. Now, granted, again, if things worked out really well, options are going to be amplified and all that kind of stuff. But notice what I saw after post earnings. I noticed that the same stock, and I'll just go and drag this out. If I had been a little bit more patient, I could have got into a trade after earnings and went all the way up here. So I want you guys to see the difference now. So we have something like this. We can have this type of return, or we can have this type of return. Now, it does take a little longer, right? But here was the thing. What I loved about this was one, it was more manageable. There was things I could watch for and anticipate and I could manage my trades so much easier than on the day of this. Because on this day, if it did not, it was a 50-50. This was always 50-50. The day of earnings was always 50-50. Whereas the post earnings, what I loved about it was, and what I loved about it even better than pre-earnings was the results is out. That uncertainty is no longer there. Does that make sense? The uncertainty is no longer there. Everybody's now calm. They've moved on to the next, sizzling stock, the next shining syndrome object that's out there, while these stocks just do their thing, slow and steady. I used to show a video of the tortoise and the rabbit and have them race, and you'll see that the tortoise will always beat the rabbit. You can go on YouTube and find videos on that. And so I realized that slow and steady wins the race. So yes, this might take me 3-4 weeks, but I know I have a better chance of being profitable than trying to gamble on that earnings trade. Fair enough? And this, ladies and gentlemen, is what just blew my mind. I say, why? First, why did nobody tell me this? Second, how come people are not talking about it? Third, how is it that people don't know about this stuff? Or if they do and they're not talking about it, like, why not? And I said, isn't the goal of what we're trying to do here is to make money? I was like, wow, you can make money so much easier, less stress, more consistently, more manageable than having to wait for the big home runs. And so if you ever seen this movie called Moneyball with Brad Pitt and how he selected his baseball team, I won't spoil the movie for anybody else. This is what I mean. I would rather get to first base consistently than have to try to hit home runs. If you like that concept, then what I do and what I teach, you would love it. Okay. So let's go on. With the post earnings, I noticed that there were 4 types of patterns. There's actually more, but I'm only going to share with you guys a few here because of time. The most basic ones that you will see are these 4 right here. When the earnings result comes out, you will find some stocks that they will gap up And then what ends up happening is they will gap up and then they'll fade out. Okay. Then others will gap up and continue going higher. That's kind of what you see in this chart that I have here. This is a gap up and continuation. But there are some that will gap up and fail. I'll show you that too as well, right? Then you have those that gaps down, like today, Shopify gap down. So the question now becomes, is it going to be a gap down and continue to go down, kind of like what Facebook did? Or is it going to be a gap down that is going to reverse very soon? And I can tell you out of these four, my absolute favorite without a question is this one down here. The stocks that gaps down, but then reverses. But there's some key criteria that I want to see in these type of situations. Okay, there's some key criteria that I want to see in this type of situations. For instance, one of them is I like the ones, if you've ever had this happening, and help me out, just type in a yes or no if you've ever heard this before. You hear about a company coming out with earnings, they beat, meaning that they surpass analyst expectations on all the revenues. They beat earnings, the profits, and they have good forward guidance, right? So they beat top and bottom, and they had good forward guidance, and you see that the stock drops. Anybody ever seen that before? Right? Where you see they beat on earnings, they beat on revenues, they had good forward guidance, and the stock actually goes down. Maybe it gaps up one day, but then right after that, boom, it comes down. That's kind of like what this gap up and fades are about too. So when I look for these gap downs or these gap up and fades, or the ones that trend down after earnings, that to me is a gold mine. Okay. Oh, Shopify, I didn't know. I didn't even know what the results were. So Donna is saying that Shopify went down today. So was it good earnings, good revenues, and maybe they had shaky forward guidance? I don't know. Okay. But and even that shaky forward guidance is not that bad. But the ones that beats earnings, beat revenues, especially if they have good earnings and then the stock drops. Oh my goodness, guys. I don't know if anybody's ever paid attention to that. I'm telling you from now on, you are doing yourself a disservice if you don't pay attention to what I'm going to tell you right now and focus on that the next time you hear something like this. Okay. This is what a gap up and fade looks like that I was talking about. I love the ones, again, good earnings, good results, good forward guidance. I used to watch for that before, but now I don't even pay attention to it anymore because I don't really need it. But what you'll see is the stock gaps up, and then what did it do? It fades right away. I love this. This is my second favorite, by the way. Absolutely second favorite. Okay. These are the gap up and continuations that I talked about. So these are the ones everybody talks about. Everybody wants to talk about this one, right? But I'm saying that's, it's okay, but it's not my favorite. I'll tell you that right now. Okay. Then you have the gap downs and continuation. These are my least favorite of them all because I'm more of a bullish bias person. So this is kind of what Facebook is doing right now. Okay. And so when this happens, I'm like, I'll see you next time. Okay. But my favorite, absolute favorite is this right here. This is what I'm talking about. Stocks that gaps down and then reverses. Again, this would have been me the day before, back in the day, trying to anticipate that it's going to gap up. Okay. And then if it didn't, went against me, I lost a lot of money. But let's just even say I got it right. Let's say I got it right. I expected to go down and it gapped down. So I shorted over here or bought put options and I got out over here, made some good money. I want you guys to see this. Okay. This is the distance here compared to this distance right here. Let me just even draw it. This type of rally, this type of profit potential compared to this type of profit potential, simply by understanding a few things. Okay, that is what we're gonna do. So let's go to the charts so I can show you what I'm talking about. Here is a chart of Apple. Like I said, Apple is one of those stocks. Microsoft is one of those. American Express is one of. There's a number of stocks that we have, and this is why I say they're like customers. If you listen to what was said about me in my introduction, I said what we do is we try to work on building a list. I see it as a business. I see it as like, finding customers who have a behavior pattern. I mean, after all, Google does that to us. They know all our shopping habits. Facebook, they monitor what our likes and dislikes are, and then they kind of target us that way. And I said, why not the stock market? Can we find certain stocks that behave a certain kind of way before, during, or after earnings? Put that on our list once we know what that is, and then start watching for it every earnings season. That's simply all we did. And so here's a great example. Remember what I said, 30 days before earnings, what you will see is this. This is Apple, 30 days, this is the earnings. 30 days before earnings, this was on April 30th. Let's go to March 30th. Can you guys see this now? Why people do not pay attention to something like this is beyond me. Not beyond meat, beyond me. Okay, here's another one. Here is July 30th, right there. Let's go to June 30th, somewhere around here. Look at that rally that you could easily, so much easier to make money than this. Have you guys seen this? Okay, just knowing how early this happens. Here's another one. Right there was on the 29th of October. You go back here to the 29th. Let's just say the 25th of September. You had a rally. Now we kind of gave it up, but again, we had a decent rally before all that took place. Here we go again. Somewhere around here. Prior to that was somewhere around here. Okay. See how this is happening. Russell is saying, your presentation is awesome. Thank you. In your research, did you notice any stock that traditionally pop or plummet after earnings report? Absolutely. Absolutely. There's a lot of them that does that actually. Okay. And the key is to learn how to see and identify them. Okay. I'll even touch on some of those that, pops and then, plummets after their earnings report. Here's another example here, April 28th to 30 days prior. Look at these guys. I'm not making this up. Sometimes people say, hey, what's the success ratio? I say, you don't have to ask me. Just go back and see for yourself. I'm not making any of this stuff up. This is July 27th. Let's go to June 27th. Ladies and gentlemen, look at this. Now, be honest, how many of you guys have been focused on trading Apple 30 days before earnings simply because you know this phenomenon? Now, what if it doesn't work all the time? So there are certain things we need to see to make sure that, yes, the move is happening. We'll cover that later. But the idea here is, ladies and gentlemen, there are stocks out there that does this over and over and over again. Here we go again. Here, that was on the 28th. We can come over here, the 28th right here. You could have made some good money. Does that make sense? This is pre-earnings. And this happens over and over and over in multiple stocks. Now, Apple recently had earnings. It did not work this time around. Okay. And this is what I mean, is sometimes it won't work. So this was on the 27th. If you go here, we were expecting this to move because we started seeing this, oh, wow, the move has already began. But somewhere around here, we knew something was wrong. We got out. And again, I explain and I teach you these kind of things to understand how to take advantage of this. Now, that's the pre-earnings. Okay, I like it, nothing wrong with that. But what I prefer are the post earnings. And one of the stocks that I do this on a lot is Bank of America. Just even recently did it with Bank of America right now. Okay, here's one where, let's go back here. I want to show you this. Earnings comes out, Bank of America drops in price. See, this is the day before earnings. This was earnings day. Bank of America drops in price. I love those. Now, here's the thing. I want you to write this down. Remember, we had 30 days prior to earnings for the pre-earnings. Well, for the post-earnings, what we look for is 2 to 6 weeks after. Now, that's probably the worst thing about this whole strategy, is that you just have to be patient. Okay? But there's a way to get around all that. But the idea here is when everybody's talking about the one that happened, even like Spotify, to be honest with us, we're not interested in Spotify right now. Guess when we're going to be interested in Spotify? 3 to 4 weeks from now. That's when we'll be interested in Spotify. Because what happens is they come down and then they have all this wiggly run and all this stuff is happening to them. Okay. And again, keep in mind what we said earlier, especially the ones that says they have good earnings, good revenues, and especially they have good forward guidance and the stock goes down. It's like perfect. It's almost as if what these guys are doing, and this is just my theory, but it almost seems like what they're doing is they waiting to shuffle things around, make this thing come down so they can buy it at a discount before it starts rallying. And so what we notice is that 2 to 6 weeks after this earnings report comes out, you'll find them, especially the ones that have gapped down after earnings. Wow, majestic returns that you can get from this. My time is almost running out, so I'm just going to fast forward a little bit more. Take a look at this. Earnings, it drops down after earnings, gaps up. Earnings, it drops down after earnings. Look at what this stuff does. Okay, so when everybody else is paying attention to what's happening on earnings, I'm like, I don't need to pay attention to that. You know what I'm doing now? Rather than focusing on the Spotify, what I'm interested in doing is focusing on the stocks that came up a month ago that met this criteria. Look at this. Earnings comes out, stock goes down. I say, God bless you. Boom, stock goes higher. Okay, this is what we look for. Earnings comes out, stock goes down. I said, thank you very much for that information. Stock goes up, make buku money, relax, sipping pina colada by the beach. Okay, because we know we're in good trade. Earnings comes out, stock gaps down. Look at how it goes up. Are you guys seeing this? Same thing recently. That's the same thing that just happened to Bank of America recently. Earnings came out, stock went down. I said, God bless you. Look at what happened. And here's the thing about this, because I do have to wrap this up. One of the things is the ones that drops down like this, why I like this so much, part of the reason why I like this so much is from the time that they drop down, when the reversal begins, which is the key, is learning how to identify the reversal. When the reversal begins for earnings, that earnings reversal, when that begins, they will usually come back to that high of the earnings drop. That makes sense? Most of the time, they will even surpass that. And so now, if this stock drops this much, and I'm ready to get in somewhere around here, I can now understand how much money I'm actually going to make before I jump in. So if I have 10 different stocks that have the same pattern, I can pick and choose which ones I want to jump into rather than worrying about, oh, is it going to go up? Is it going to go down? I don't do that anymore. Okay. And that's kind of like what this is all about. Last but not least, I'm going to show you the ones where after earnings, what if they gap up in price? Kind of like how Facebook did here. If they gap up in price, I use a very simple rule. I draw a line at the high of that day. 5 candles later, if it crosses above that, I know it's going higher. But there's so much more to this. The biggest thing I wanted to bring to your attention is if you're not doing this, you're missing out, first and foremost. Okay. Shopify today, let me show you what Shopify did. Shopify today, let's go here to Shopify. Look at how big that drop is. I'm not so concerned about this. I mean, let everybody else try to do that. And don't get me wrong, there are people that know how to trade this and make money off of Shopify doing this. But you know what I'll be more interested in? Let me show you this stock right here, Honeywell, which had earnings, gap down, and is now going down. It's been 2 weeks now. I know very soon I'll be able to start jumping into Honeywell. Most people are not talking about Honeywell right now. Shopify is the one they focused on. Look at this stock right here. This is one that gaps up and fades. Are you seeing this? I'm like, oh, yes. Okay, this is excellent. This is marvelous. Why? Because when they start reversing, wow, it's going to be a consistent, steady trend to the upside. The only thing we have to do now is understand a few rules to apply to this to make sure that we're doing this right. And that's what I'm going to invite you to come join us if this is something of interest to you. Ladies and gentlemen, market just closed, so I'm going to wrap this up too again. Ladies and gentlemen, I have to tell you, I don't day trade. So if you're looking to day trade, this is not a day trading strategy. I apologize about that. Okay. But if you're looking for ways to find stocks that you can swing trade over 2, 3, 4 week period without having to worry about volatility and all that. Let the dust settle. See, I like that. That's part of what happens here. Is like all that dust is settled, all the volatility is out, all the uncertainty is out of the way. And then it almost seems like they purposely drive this down so they can start acquiring discount after earnings, so you don't have to worry about earnings for the next 2 months on this. No surprises for the next 2 months, just consistently managing this. Then I want to invite you to come join us. Okay. I want to invite you to come join us this Sunday, actually, I'm sorry, this Sunday evening, 7 p.m. If you can't attend live, the recording will be available, but make sure you sign up. Okay. Go to this link right here, rightsidetraining.com/earnings. Now, I'm going to do one thing, which is for the first 10 people today and today only. Okay, just 10 people, first 10 people, what I'll do is I'll knock off $400 more off the price. But it's only for the first 10 people. After we get 10 people, then we're going back to the 647. Okay. Now you can still buy it after the 647, and that's only today, by the way. So whichever one comes first, either first 10 people or by midnight Eastern time tonight, then it's over. Okay. I'll give you 400 because I think that for $247, you can learn something tremendous. This is what we're going to talk about when we come here on Tuesday. I'll show you how to do all the stuff I mentioned earlier today, how to tell when to buy, but I'm also going to show you some other patterns that I did not get a chance to show you today. So for instance, have you ever noticed when stocks comes out either before earnings or after earnings and they get an upgrade or they get a downgrade? How does that affect the stock? Have you ever paid attention to that? How does that affect the stock? We've done the research. I can show you what we've done. I can show you what we see so that now you can use that to your advantage. If they have an upgrade or a downgrade, when to start buying, how long does it take, all that kind of stuff. What about IPO stocks? We know stocks that have IPOs can have huge gap ups on earnings or huge gap downs on earnings. IPO stocks can move just like almost like cryptocurrencies move. So if you're looking for the ones that IPOs, wait for the earnings. One of the best times. Any IPO stock that has earnings, good, bad, or ugly, how do you then take advantage of that, or even the SPACs? We're going to talk about that. I'll show you the patterns in there. What if we go into a bear market? I had people asking me, then what about if we were in a bear market? Does this work? Is there any way we can do things that way? Yes, I will show you how to do that. But more importantly, I will show you how to manage. When is it time to start buying? Because this is going to be critical. You don't want to be too early to the party. You don't want to be too late to the party. I'll show you when to take profits, so you're not hanging on to trades that you should be out of when you shouldn't even be in there anymore. I'll show you that. Okay. And what about if you lost money on earnings? Would you like to know how to tell whether you can recoup that money back or not? And this is something that to me was a game changer for me, because back then I lost all this money, had to walk away, and it's like, oh, only to come back 2 months later, 3 months later. It's like, man, that stock did exactly what I thought it was, but these market makers are watching my account. I don't believe that anymore, because I understand. What I realized I wasn't doing was I didn't understand how to trade earnings. And so now all that has changed. Okay. So if you lost money on earnings and you want to figure out how to recoup that, you definitely want to be at this webinar on Sunday. So again, the price is $647. But if you come and you sign up as one of the first 10 people, this will help you a lot. Okay. Russell is asking, look, I know it's an unrelated question, but many anticipating an upcoming crash. So say 80, 90%. Any thoughts on that? Thank you. Well, I would just say this. We are still watching the data to see whether or not there's some weakness in the market. I would give them that. Okay. But at the same time, there's still some, market is at a place where it could actually easily rebound. And so that's what we're really watching right now, is just kind of see. We just need a little bit more data to tell us which direction it's trying to go. But either way, it doesn't matter whether it's going down or it's going up. The key is, do you know what strategy to apply in any market conditions? And so again, when you come in on this Sunday, I will show you how we're doing this. I don't worry about earnings anymore. If anything, I get excited about earnings season. Okay. I get excited about earnings season now because there are stocks I can pay attention to. There are stocks I can focus on. I know when the signs are saying they're ready to start going up. And so we use that to help us. All right. So take advantage of this, ladies and gentlemen. Even if you have to pay the 647, I can promise you that the information you're going to learn from this, you will recoup back the 647 before the year is over. Okay. Heck, before the next 2 quarters, you might not be able to do it this quarter because you're still learning, but within the next 2 quarters, I see no reason why you can't recoup your investment back. So don't let money stop you. We do have some financing for those who might say, look, can I just pay, instrumentally? Let us know. We'll help you. I think even on the website there's a link for that where you can do that. Okay. But the idea is to kind of help people. If we are going into a great recession like everybody believes it is, okay, we need to know how to make money off of this market. So now's the time to invest into your future. People always say, why is the grass greener on the other side? And I tell people, don't focus on the grass on the other side. The only reason why the grass is greener on the other side is because they watered their grass. What you need to do is make sure that you're watering your own grass so that way your grass will be greener as well. So come on there on Sunday, and I promise you I will show you things that will help you with earnings season from here on out. This is something you can use. You teach your kids. I teach this to my kids. Okay, we don't worry about Feds. We don't worry about what's happening in Russia. We just look to see what the data is telling us. Any questions? Okay, because if not, thank you. And again, I look forward to seeing you guys on Sunday. Take advantage of this while you can. Thank you so much, everybody. And thank you for having us on this call. I'm going to go ahead and turn it back over.
Thanks for joining us. Thank you so much.
Absolutely.
Okay, guys, I put rightsidetrading.com/earnings into the chat. Wally, did they have your email address to get in touch with you?
Yes, it's info@rightside trading. I guess I can put that in there.
Info.
Info
It's
at
okay, I got it.
Thank you.
Okay. All right. And everybody knows they're going to be getting emails, so be on the lookout for that. And then I really appreciate you being here today. Really do.
Thank you. Thank you for inviting me.
So we're going to wrap up our day here today. And I just want to tell everybody, like all my speakers, I thank you so much for coming in, and much appreciation to everybody who attended and stayed until the end. This is your host, Sherry. And from all of us at Traders Exclusive, we're just going to say join us again next time and trade well. Bye now.